Two really great strategies that can really help increase your trading odds. And the other thing that you're going to see is that these are really kind of high return, low risk type strategies. So we're going to talk about the butterfly and the long condor. And the thing that's really fantastic that I think about these two strategies that they work with any environment that you're trading within, but they're really great when you get into more uncertain times with more extreme, potential volatility because you can control your risk so well. So the following presentation here today is purely for educational purposes. Any stocks, options, futures, or ETFs mentioned does not constitute advice and should not be construed as a recommendation. Now, to me, the secret to trading profits come down to three basic things: direction, timing, and then really good risk management. And to do the risk management side of things, it's always great to go and fall back on options. Now, over my 30 plus years of trading options, I found that the most valuable go-to option strategies that can really help any trader more than any other strategies are the butterfly and long condor. Now, the great thing about these two strategies is the advantage that they give you based on their option framework that allows you to construct trades that are going to provide you more consistent and greater returns and in any type of trading environment, especially when you get into these higher uncertainty volatility type markets. For example, yesterday, it didn't take much and the herd kicks in and runs to the exit at the same time. And, you get a lot of exposure there. So you want to keep your risk. If you want to really keep it under control, these two strategies can help. Now, because they are structured to require only a small amount of your, hard-earned capital, your trading returns are going to be greater based on that lower capital at risk. And it really helps to alleviate a lot of your trading stress. And that's, always a major win-win. In my opinion, for traders. Now, when we look at the butterflies and long condors, they're very dynamic and they can be traded for a variety of different reasons with, different goals in mind. So in other words, you can learn how to trade a butterfly or a long condor and you're going to be covered for both your offense and your defense. So, goals, your profits, your protection, your hedging. So they're very, 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 very great advantages and benefits that you're going to get from these two strategies. Now, these two strategies, they can work no matter what the markets are doing. You can be in an up, down, or sideways market trending. You can be, can help to structure for income from stocks that are basically going nowhere. Really helps to eliminate the stress of having to be perfect on a direction of your stock or overall market for your trades. And a big, big factor is that they're going to help you to eliminate that time decay expense that you encounter from decaying long options. Also, they're going to help take a lot of the guesswork out of your trading because you don't have to be exactly perfect. It gives you a lot of, kind of a zone that you can use for your profits. So it gives you a bigger window for that and it also keeps that risk low. They can be structured at a very low cost or low capital at risk for each and every trade you're doing. And you're going to see here today, you can get potential, returns of 10 or 1 or higher on your risk. Now, let's be real though, these kind of spreads, these option spreads, they're not going to give you that unlimited profit potential, such as if you just go long calls, but they're usually going to cost you a lot less than buying outrights. And they're really, an amazing when you look at the risk reward that they give you on each and every trade setup. Now, this means that the butterflies and long condors can really significantly increase the probability of your winning trades while also reducing your risk. And that's really what it comes down to in trading. We want to, you want to look, I always look at the risk first, and then I look at certain parameters on that, but the risk comes first, and that's going to keep you in the game. Now, when we look at the butterfly long condors, they're really great for hedging. So when you mess something up, these are going to become the best way to cover your what pronto by creating a hedge using either the butterfly or long condor strategy. And I've literally found no other way for hedging that comes close to these two strategies for immediately neutralizing that risk and controlling the risk. So when you construct a butterfly or long condor around a strike that is under pressure from another core trade, such as if you do credit spreads perhaps or debit spreads, you're going to see that it's the best way to really immediately neutralize, and it's going to reduce that risk and control that risk. So it's a fantastic way just from that standpoint only, if you're not interested in the trading any other way from the profit or income side, from the hedging component of it, it's fantastic. Now, when we look at the hedging of it, what it allows you to do is it allows you to keep your original position open by just implementing either the butterfly or long condor hedge around that core position. So this hedging strategy, what it does is it helps you to take advantage of the time decay component of the strategy. And so while you wait out maybe a trade, maybe you've put on a trade, it looks fantastic, and then some news headline comes out, stalls the market, stalls your trade out, and then you're not sure what to do. But this is one thing you can do. You can set up a butterfly or condor hedge on that core trade. And many times that's all you need, just that little extra time for the market to settle out, and then your original position stabilizes and moves back in your favor. For example, yesterday, we had the big sell-off, and then, just one day later it's back up. But a lot of times you just need that extra time. And this strategy helps because it has that time decay component, which lets you get paid while you wait for the trade to stabilize. So once it then stabilizes, you can then remove your hedge, stick with your original trade, and ride it out for what it's worth. Now, when we look at the butterfly, it's a fairly simplistic setup. They're basically vertical spreads. And so if you look here in this example, this would be like a call debit spread, or you could do these with calls or puts, but let's say you're long a call here and you're short a call. So you've got a call debit spread, and your risk here is $300. Okay, so closes up here, you make your max profit. But what I look to do is I try to never lose your total at risk. So a couple things you could do: you could stop out at a certain percentage, or we could easily convert this to a butterfly. So what we could do here, let me get my drawing tool here. So we could sell a call credit spread against it, bringing in $200 of credit, and then we constructed this balanced butterfly. So what we did, we went from a call debit spread, so we're long a call here, short a call here, we sold a credit spread against it, and now we reduced down the risk to only $100, and we still have this profit zone. So this is kind of sometimes referred to as the profit tent, and if it goes out here at expiration, that's your max profit. But what you've done is you've neutralized that risk, and also at the same time reduced it from 300 to 100 in this example, and still have a nice zone for profit, or you can leg out of your hedge either way. Now, the long condor is a really good one, because what I love about the condor is that it widens out your zone, your profit zone. So instead of, the butterfly is great, it's going to really knock down your risk, but you've got a tighter window to thread, okay, kind of that needle there. But you can do the long condor, puts or calls, and you can widen out that profit zone. So it's a great way to hedge, or you can put this trade on as an initial long condor trade and get your risk super low, but you still have a nice zone of profit, but very low at risk, low, positive theta usually, and a real favorite for hedging as well. Now, the core concepts that make the butterfly and long condor amazing really comes down to the most important option factor for, when we look at options in general, but when we look at the butterfly and long condor, it comes down to really understanding how option pricing works. So when we look at the price of an option, the really key component is time decay, or what we refer to as theta, and how this affects the price of your option. The other big component is volatility. So when we're pricing an option or using options, time decay and volatility are extremely important, and that's what sets the price up or down. So let's take a look. Now, when we look at the option theta, that's part of that time decay component. That's the Greek theta, and it tells us then how much an option price is going to go down over time. So this is the rate of time decay of your stock's option. Now, time decay occurs because it's also referred to the extrinsic value, because the time decay value of your option is going to go down each and every day, and at expiration will be zero. So you've got to really control that. When you're doing long options, let's say long calls or puts, your trade can get just eaten up alive just from the time decay component. So that's the other great, benefit and advantage of the option spreads, and especially when we look at the butterfly in the condor because it really helps you to alleviate and knock down that theta decay expense. Now let's take a look at the butterfly and long condor to see how the structure actually works. Now here's an example. So here, if you know, what I like to do is always have a target. Okay, so I kind of use what I call a 7-step process for any and all trades. So in this example, let's say XYZ is trading at $45 and we have a target. We think it's going to go down and we have a directional target then, and we're putting in this example at $43. So for price target, I like to use Fibonacci, moving averages, things like that. But so the key here is we're targeting 43. Now this is, you can see a very small move, but here's how it works. So in this example, we want to target the 43. So I'd use that as kind of the body of the butterfly. So going to buy the January 44 put, would pay $2.38. So that would be like $238. And, you know, remember one option contract is equivalent to 100 shares. So that would be, you know, $238. Then you sell the 43 Jan put against it. You're going to bring in $1.67 credit. All right. So that's if you look at that, that'd be a put debit spread. Then you're going to sell another 43 put and then buy below it the 42. All right. So you can see your structure here. You've got a dollar-wide strike between each of these. So 44 put, 43 put, 42. Now this just then created a balanced butterfly, all right, with a dollar-wide spread. So if you look at your costs, you take the 238 debit here plus the $1.06 debit from the 42 put, and then minus your credit you received from the 43 puts you sold there, times 100 to convert it to an options contract or spread contract, and you can see your risk here is $10. So that's the maximum risk. If you did one butterfly spread here, your total risk is $10. That's all you could lose, up or down if it, you know, collapses down or goes straight up. Now to look at your profit, you just take like your middle strike, 43, less your lower strike. You can see it's a dollar wide, and then less your cost of the trade, 10 cents or $10 here. All right, so 43 minus 42 minus your cost of the trade, 10 cents. So your potential profit is 90 cents times 100. So theoretically, you could make $90 per one spread if it goes right out at your target price at 43 at expiration. So if you look at that risk and your reward, that's a 900% risk reward or return. So you're risking $1 to make 9. So that's what really makes these an amazing strategy. And there's not another type option strategy that offers you this kind of, you know, positive risk reward. So it gives you fantastic returns if you nail the direction. All right, so it's a great way, and I guess the concept too, you can see that if you're really in an uncertain market, you can keep your risk so low but still have potential for big returns on that risk. Now let's take a look at how to choose the best butterfly or condor strategy, you know, to match your trading goals. So one major goal of every trader, in my opinion, should be to select trades based on what's going to give you the best or most consistent positive returns with low defined risk, and not always the biggest return, right? So in trading, it really comes down to kind of hitting singles and doubles, and then occasionally you're going to hit that, you know, triple or home run. So you want to be consistent with your equity curve, and this will really help you in a lot of different ways to do that. Now, then one of the best ways to achieve this goal is you want to be aware of the different option strategies that are out there and available to you, understand how they work, and then select the one that's best suited for the market environment you're trading and your specific trading goals. So, you know, Bill might have a trading count of $10,000 or something, and Chris has 100,000. So that's also going to play into your risk profile of how you trade and time of the day that you can trade. So are you a passive trader, more, you know, in there all day? But the one thing you'll see when you look at the butterfly and condor, it can be traded for any account size. So you can have a small account or you can be a big hedge fund and use these strategies, and they work either way. Now, next, let's take a look at what I call the butterfly family. So there's some different variations of the butterfly, but the one common thread for the butterfly strategies and the long condor is you've got that time component where you're selling time and you're selling volatility. So when we look at the butterflies, you've got the long caller, you can use puts for a butterfly, We've got what we call the broken wing butterfly, which you can use calls or puts, sometimes referred to as a skip strike butterfly. We've got what I've termed as the ninja butterfly, which is an unbalanced or ratio butterfly. And then we've got the iron butterfly, and then there's a whole nother side of it, which is hedging, okay, using the butterflies. And then we get the other part of the family here, the long condor. So let's take a look at a few examples so you can get a feel for how these work. So first we'll look at the butterfly. Now, when you look at the butterfly or even long condor, you can adjust your risk and your profits based on the wingspan of your butterfly. So for example, let's say you're actually trying to catch a butterfly. So if you've got a small butterfly net, it's going to be harder to catch that butterfly, right? But if you've got a big wide net, you've got a bigger net, bigger zone to catch that butterfly. So the same concept kind of applies when we look at trading butterflies. We can either do a small, narrow butterfly, which will be really low risk, or if we want to have a bigger profit zone, we can do a really wide butterfly. So this widening out is going to increase your risk, but it's also going to increase your profit zone. So, you can go either way. So it's another thing that you have an option for with options. And that's the beauty of options. You've got so many different advantages from the options that they provide you. So the first example will be kind of a narrow wing butterfly. And this will be on SPY. So butterflies, condors are great for the ETFs, SPY, QQQ, IWM, and also the index options, SPX, things like that, or just stocks or futures. So it doesn't really matter. Here's an example of a narrow butterfly. So this was SPY, and we're looking for a directional trade to the upside. And I like to use these directionally, but here I like to use Fibonacci. So you can see my pointer here. The price of SPY at the time was trading right about 267, right in here, breaking through that 382. We were looking for a target up here to that 618, right around 273. So there was a Fibonacci level, and there was also a lot of option activity right at that level. So it gave us a good target, but wanted to keep the trade really, really tight and low risk. And you can also see this as a short duration trade. So you can make these very short duration. It can be 1 day, or it could be, out 8 or 9 or 10, or you can go even further. But the biggest advantage a lot of times, though, is the shorter duration, because it really takes advantage of that accelerated time decay. So with this trade example, did a narrow wing butterfly and did the targeting. We were targeting 273 based on Fibonacci. So here's the body of the butterfly. So bought the 272 call, sold the 273 call. Okay, so if you look at that, break it down, it's called debit spread, and then sold the 273.74 against it. That created this narrow wing butterfly, because if you look at the spread width, it's $1, right? So 273, 272. Okay, so the dollar between strikes. So that would be $100. So one option contract's equivalent to 100 shares. So $100 less the cost of the trade. Look at that, it's 10 cents, 10-cent debit, so $10. And here it is, your potential profit theoretically would be $90 at expiration if you nailed it right at 273. So that would be a 900% return. Now, you're probably never going to hit that exactly on a butterfly, but in this example, you can see it did hit $70 per spread, and that's a 700% return. I mean, there's no place that you can get kind of returns like this that are, capped and defined risk. So that's an example there. And let's take a look at the risk profile. So here it was going out at expiration. You can see that profit zone, the tent here. The purple line is what it's doing in time. So you can see it's right there, almost the top of the tent. And it's trading right here at that 273 level. So this went from down here, 10 cents debit, which would be $10 per spread, to 80 cents or $80 per spread. And that would be your profit of $70. And that on that risk of 10 is a 700% return. So in this example, just 4 contracts, was $280, and your total risk here would have been $40. So, when you get in a crazy market that you're not sure what's going to happen the next day, but you want to, be in there because you've got a good trade idea, directionally or non-directionally, this is a great way to do it, because you can keep your risk exposure extremely low, but still have that potential for the big payoff. when you look at the return on your capital. Now, this next one is a wider wing butterfly, and this is on Amazon. Now, the other great thing with the butterfly, you can trade these big high-priced stocks like an Amazon or a Tesla, and you can do it for a small fraction of what you could otherwise do if you're playing the shares. So here's a directional butterfly, wide wing on Amazon, $3,000 wide butterfly. So again, here's the directional take, looking for a move up, and it was trading right about here at 31.50. Okay, so right here, and we were looking for a move, a target move up to kind of a range of 32 to 32.20. So right in here. Okay, so here, if you were trading the stock, and if you bought 100 shares here to make it equivalent to, say, one option contract, you're going to be forking out, $315,000 for 100 shares. So that's a huge amount of risk if you think about it, if you just bought 100 shares of something like Amazon. But with a butterfly, we can trade it for a fraction of that. So in this example, you can see we were targeting up there to that 32.20-ish area. So we set the butterfly with the body targeting that 32.20. So bought the 31.90 call, sold the 32.20, and then sold the 32.20 again and bought above it the 32.50. So if you look at the strike, the spread between the two, 32.50, 32.20, that's $30, or that'd be equivalent to $3,000. So if the spread width on one contract, that's $3,000, but the cost in your total risk here is $388. So here, see the debit, 388 or 388. Now, the fantastic thing is now you're controlling a stock. If you had bought, say Amazon, and you bought 100 shares here, you'd be out $315,000. And if you hit your target at 3,200, well, you would have made $50 a share, and that would be a 2.33% return on that huge amount of risk. But if you did the butterfly, if you did just one contract, which would be equivalent to 100 shares, your risk is only $388. But look at the potential return. So if you nailed it perfectly at the close at expiration, you would theoretically you'd be making $2,612, per spread or one contract. Okay, and that would be over 600% return versus here making a 2.33% return. So it just really doesn't make sense if you go through the math and you look at it. So that's the beauty of it. Now, here's the risk profile, what it looked like going out at expiration. So when you do this, you're never looking for that full amount of profit, but you're just looking to get into the zone and play, if you think Amazon's going to go up and you want to play it, but you don't want to play it for $315,000, here's the way to do it. So you can see what happened here at expiration. It goes from, it went up to, it was going out right here at expiration. So that was right there at 32.10. So really close to the target. And so this was, on the expiration date of the 27th. So it went here from 388, which would be $388 to 1426 per spread. So that'd be $1,038 if you did one butterfly, and that's over 260% return. So here's the huge difference versus being long the shares, or even going long outright calls, would cost you a huge amount of money and a lot more risk. So it's a great way to participate and also always keep that risk very, very defined. And if you get it wrong, you're going to live to trade another day. Here's another example on NVIDIA. It's also, one of these stocks that can really be a high flyer, but you want to really control the risk. So here's a spread width of 1,500. So here was another example of a directional trade. We're looking for a breakout, and we wanted to participate, but we wanted to keep our risk defined because it can also be kind of sometimes a volatile stock. So it was trading at 534, and we were targeting just up here to this 550 area right in there. So did a butterfly here targeting that 550 target. So bought the 535 call, sold the 550, sold the 550 again, bought the 565. So this is you can look here, it's a $15 wide spread. So that'd be $1,500. Now the cost of the trade was $220, $220. And so you're controlling this stock. If you went out and bought, 100 shares of it, you would have paid over $53,000. And if you hit your target here at 550, well, you made $16 a share or 3%. But here, you're controlling the same stock with only $220 of your capital at risk. And if you hit your target of 550 at expiration, theoretically, you make $1,280 per spread or over 500% return. So huge, huge difference. So here it was going out at the target. So hitting here, not quite there at the target, but we hit it right there into the 13th when the spread was hitting there. So taking profit, and you can see it went from 220 right here. Let me get my drawing tool so you can see it more clearly. So the spread cost was 220 or $220 per one spread, and it was at 427 trading right here at that point in time. So the spread was 427 less your cost. So it was up $207, which is a 94% return, and on a super low risk trade. So another way to play a high price stock, but play it with really defined risk and have a potential for a big return on that risk. So there's another example there on NVIDIA. Now this is a really interesting one too, because this is another an example of another really big benefit for the butterfly. So again, here's on Amazon. So Amazon had been trading down here kind of in a tight range for Amazon. This was a 200-day moving average, and it was, we were targeting up here at this 1830 level that it kind of kept bouncing off of. So wanted to set up a trade that if we got it wrong and it exploded through it, we had really good defined risk, or if it broke down, we had defined risk. And plus, the expense of Amazon, like here, it was trading at 1782. So if you're, buying shares on 100 shares here, you'd be forking out over $178,000. So here's the trade setup. So we're targeting 1830. So bought that 1820 call here, sold the 1830, sold the 1830, bought the 1840. So $10 wide, $1,000. Now look at the cost of this trade, 80 cents. All right. So you're controlling 100 shares theoretically of Amazon that would cost you $178,000 for $80. You do one spread, $80. If you did 10, your cost is $800. Now here, if it hits your target and you own the shares, you're up $48 per share, 2.69% return. But here, if you were hit your target perfectly, you're up 920 on that risk of 80. So over 1,000% return. So here's example of greater than 10 to 1. All right, but the other really big takeaway is your cost is so low, your risk so low, and you're playing a high price stock. Now here's the other really huge benefit here that I'll show you with the butterfly. So here it is going out at expiration on the 6th, okay? So this is in the morning, so about 9:30 a.m. Central, around that time, and it's hitting right here. It's gone out, it's actually overshot the target, and it's trading at 1836 right there. So at that point in time, this butterfly went from $80 to $230 right there. All right, so that is $150 profit on one spread if you did one spread. Now that's still a really great return, 187% return. But here's the really incredible part, because of the time decay component and volatility. Here is the same spread, profit and return about 3 or 4 hours later in the afternoon. So it's 4 times more. So here it is trading in the afternoon. It's now trading at 1832. So it came back a little bit, but you can see it went from here, $150 per spread or 187 return. Now it's trading at $614 per spread, which is over 700%. So 4 times more. And this is in the same day, just later in the afternoon. And the reason is because that time decay component is really accelerating on theta. You can see here now it's 33, and it's really accelerating. So it's about out of time decay, and the volatility is stripping out. So you're really getting that benefit right into the end of the day. So that's another fantastic advantage. Now here's the long condor, and I like this one a lot too. It gives you a wider profit zone, but it's also kind of my first stop for a hedging. And here's an example of a defensive hedge, on SPY. Now this is one to just kind of enhance the trade and the potential profit. So when you're also using options, kind of think of options as, as a board game or chess or something, or cards. You're always think a couple of 2 or 3 steps ahead. So in this example, we're looking for the SPY to break lower and we were targeting here this fib level here, 618 retracement at 270. So did a set up a put debit spread targeting here. Now, the problem with shorting this market has been that it'll hit it, hit down to your targets, but then it'll bounce the next day or something like that. So here was a way that we came up with to enhance the profit by converting this to a put condor. So trade one was going long the 273 put here, selling the 270. So nice put debit spread, $3 wide. So $300 wide spread, less the cost of the trade was 65 cents or $65 right there. So very nice setup, so low risk, potential to make $235 if it closed, under the spread. But that's the big if with shorting the market. And if that happened, you're up over 360%, not a bad trade. But what's been happening is you get a short, it goes down, bounces back up. So this on the bounce, when it hit the first time down around 270, you take profit on part of your trade. So that was $98 a spread, so 150% return. Not bad. It was trading right around 271. But instead of not taking it off, you could convert the balance. In this example, converted the balance by selling the 268 put, buying the 265. You look at that, that's a bull put credit spread, brought in $65 per spread, all right? So there's that spread when it was down at 270, set that up. Now here's what happens. You just created what we call a long put condor. So you've got that combination here where you had your original trade, the put debit spread, 273, 270, you paid $65 per spread, right? But when it hit down that target 270, instead of taking all of it off, you converted it to a condor by selling the 268 put, buying the 265, and we're able to bring in $65 credit. Now, actually, this one could have been even better. I remember that it was over $1 credit. It was you could have done this at about $1 credit there, so you'd actually have a credit. So here it is. You've got your long put, short put, long put, and you've got this condor structure, but now you have zero risk, right? You've put in a credit here, so now you've got a zero risk, and your potential profit, if it goes out between your short strikes of your spread, would be $300 on zero risk. So you can just kind of kick back, sit your legs up there on the desk, and wait. Now here it went out at expiration going in right here at about 271. At that point, this now was up $164 per spread, which is on zero risk, still a fantastic return. But the big key is you have zero risk for the trade now, and you can really relax on the trade and see what it actually does. So that's the beauty of that. Now you can see here, summarizing, trade one was on the debit spread, $98 a spread, 150% return. But the second part of it was $164 per spread on zero risk. So that's the really beauty of these types of strategies. And if you'd like to learn more on how to master these really high reward, low risk option strategies, they're really helpful and benefit for any market environment. I've got two things here for you. First, hopefully you got a lot of ideas here today. But these are great for weeklies, typically weeklies and monthlies. But I'm going to be doing an options masters course, just all 100% on the butterflies in long condor. Now this will be on Saturday, February the 13th. All right, so 11 a.m. to 3, and then we'll finish on Monday the 15th, 6 to 7. Now this will all be recorded, but what you're going to get to start off with, you're going to get my options masters course I did about 6 months ago on the butterfly long condor. You'll get that right away to start using, but then you're going to have access to the live course, which will be recorded. You'll get all the PowerPoint manuals, plus a great bonus package here for you today. So if you'd like to join me in another group of great traders, here's the link, and you will send you all the links and everything you'll need. But if you'd like to join me and get all the bonuses here today, I'll show you. Use this link here. You should be able to click on it. And let me put up all the bonuses here so you can look at that. You should be able to click on that link, and it'll pull up a payment link here that you can use, and you'll get everything you see here today, all the bonuses that I'll show you in a second. So it's a $197 PayPal or credit card, so go ahead and use that. Now with this package, you're going to get my 6-hour plus recorded butterfly long condor course that I did a few months back Okay, so that'll get you started. Now this, if you went to my website, powercycletrading.com, it's $397. But we're going to get you access to the live course, which will be in February, the 11th, I believe it was. And so you'll get that, plus this course will be all recorded, broken down in modules of 30 minutes or less, all the PowerPoints and handouts and everything there. Now you'll also get then, to start with, that butterfly long condor course recorded. You'll have that right away, and then we'll do a follow-up live Q&A, so you'll have access to that. And then a bonus special is you're going to get my options beginners course. So if you're just starting out in options, this will get you started to kind of understand options in general. But this course is fine for a beginner because it's yours forever. And at this price, $197, it's kind of an investment. You'll get that back pretty fast. But the course itself is always going to be yours in your library. You can always come back and access it, on the cloud and at our website. So you'll have access to this forever. So you'll have that, but then you'll have the options beginners course to get you rolling. And then I did a really great course here just about a month ago. This is what I call my Fibonacci price mapping course. So important to understand price targets, and this course is a 3-hour plus course on that. So you'll get that as a bonus. You'll get bonus 3 as another option basic course. It's a trading tutorial for options on the Greeks and probabilities. And then you'll get my bonus 4, my complete option strategy manifesto of 15 different option strategies, my Greek power tool guide. So this is a printout you put on your desk on the Greeks. And as an additional bonus, you'll get a trial membership to my trading club for 30 days. And you can start this when you want. If you want to start it, a week, 2 weeks, or a month from now, just send us an email. We'll start it when you want. So that's another additional bonus there. So I call it the Bonanza bonus package for Expo. And so use that link there. Let me give it to you one more time. So if you'd like to join us, it'll be a huge benefit to your trading, just overall the hedging aspect. So let's take a look. So part 1, when we get into the course, we'll start with the option Greeks. What are vital to make the butterfly and long condor work? And then how does that theta decay or time decay impact the butterfly and condor? And then volatility, the importance of that and how that impacts at the volatility crush. Pricing of option is super important to understand, so then you understand how these trades work. And then we go into standard deviation, which we use for price target analysis. It sounds complicated, but it's very simple, as you'll find out in the course, so you'll learn how to do that. Then we go into the core basics that most traders just don't really understand. They've heard of butterflies maybe, but maybe not, and condors and things. But this goes into the basics that really make them work. And then we get into the butterfly themselves, each and every one, the variation. And we go through each one with trade examples in this course of how, why, and when would you use like a call butterfly or put butterfly, a wide wing butterfly, a broken wing butterfly, ratio butterfly, broken wing ratio butterfly, iron butterfly, vacation, long condors, like always referred to as bubble gump and shrimp. So we'll go through in the course each variation with examples of how those work and when to use them. And then what are the best time frames for using these two different strategies? How far out do you go? So we'll go through that. And then what are the best vehicles for trading these stocks or ETFs, indexes, futures, options, etc. And then how do you actually structure it and know when to structure something for that 10-to-1 higher return type setup? How do you get profit from the volatility collapse and theta decay? So you'll understand all that and more after the course. And then another great part of the course too, we have a kind of a chapter in the course on what we call option pinning. So every month you've got expiration on monthly options, which we call pinning. So that happens, 12 times a month, 12 times during the year. So it gives you an extra kind of option kind of income stream that you can look to trade with. And so this is what we call option pinning. So we'll go through how that works using the butterfly, and then how you actually establish your targets for pinning in the course. We'll go through that, how you do that using Fibonacci, and then unusual option activity. So that's a part of the course. And then we get into the long condor part of the strategy, and so how you can use this long condor spread to really give you defined risk trades with potential for 100, 200, 300% return, and then how, why, and when to use them. But I love the long condor because of that option profit zone, and this is kind of my go-to first strategy for hedging. Now, part 3 is actually getting into the hedging part. So we spend a lot of time in the course on hedging, and I always tell my clients and stuff, if you don't know how to hedge, you're a trading accident waiting to happen. So in this part of the course, we go through the checklist of when and how to put the trades on, but then we get into how to use the butterfly and long condor hedge to hedge out core positions, or to hedge out and defend, say, a vertical debit spread or a credit spread, or I go through progressions of hedging. So how could you hedge 100 shares of stock? How could you hedge a call, et cetera? So you'll get that. We go through a lot of hedging in this course. So it's really important. We've had this massive move up, and you know it can't last forever. So you want to be able to know how to quickly hedge your position. So this will teach you in this course. And then execution management, how to do that. What are the risk management of those? And then you get a resource library of what is assignment risk, expiration, auto exercise, and a trading library. So I like to put a trading library in there of past trades so you can go back in and look, see how they work visually. So just a really great course, great feedback. I'm kind of running out of time, so I'll just skip through it. So here are the bonuses that you'll get again. You're going to start off my on-demand recorded Butterfly Long Condor Masters course that I did about 6 months ago, I guess. So six-hour plus course on the blueprint of these trades, the 368-page manual of it. So it takes you through the butterflies and long condors, and we'll follow up with the live course here in February. And then you'll get a follow-up live Q&A, option trading tutorial, 60-page option guide with videos on the Greeks, option prices, standard deviation, bonus special 1, trading for beginners on options, the benefits of options, puts, calls, how option expiration works. And then you're going to get my new course here, price target mapping using Fibonacci. So it takes you through how to map out price targets for defensive targets, for profit targets using Fibonacci, standard deviation, unusual option activity, and then my 15 strategy guides. So it takes you through 15 other option strategies, how they're constructed, when to use, like a back ratio spread, the Greek power tool guide for your printout you can put on your desktop, and then a trial membership to my trading club, which gives you access for 30 days, the virtual trading room open each and every day. So come in, ask questions, show you the trade setups, daily market video newsletter every night after the close, weekly Q&As every week on Tuesday, and then recorded, and discounts on everything on my website, 60% off. So a lot of great stuff here for you to get you started in your trading and help your trading, and hopefully you'll sign up, and I look forward to working with everybody here in the future. So use this link again, and I'm about out of time, but I appreciate the time here that I was able to spend with everybody here today. Any questions real quick? I think I might have a minute left. I sound like Tweety Bird. Forex trading, you can use the Forex, the ETFs typically. I don't do, I used to do a lot of Forex, but no, I do, at Power Cycle Trading, we trade swing trades, primarily stocks, things like that. It's much more fun than trading Forex. Trust me on that. I trade a lot of Forex. It actually, it's boring because you trade just the same thing over and over. With stocks, you get much more variation. Most of the time, I like to use the weekly options on these types of trades. Yeah. Offers good for today. So yeah, I like to swing trade. When I say swing trade, those are trades I kind of define as trades that can last 1 day to 2 weeks. I'm not looking to go way out in time. I do that just kind of from an investment standpoint. But from the trading standpoint, I like the shorter term trades to take advantage of the options that give you that, great time to cake and volatility that we can take advantage of. Yeah. How much capital is needed? Well, some of these trades are, maybe only require you $10 or $30 per spread. It just can be super low depending on how you structure the trade. Question, how long do you hold the trade? Do you always close before expiration? No, if your trade is way away from your price points, you can just let the trades expire. You don't always have to close them out. Okay, so you don't know, not necessarily do you have to close them all out. Yeah, this course will cover adjustments. Yeah, big time. This course will really be, that's one thing I really do a lot of is adjustments. So if you join us, we're always doing trade adjustments using options. So that's a big benefit. You'll learn how to adjust trades. So that's a huge, huge benefit.
All right, folks. Well, welcome aboard. The past 2 days in the markets have been historic. Literally, Wall Street died yesterday. So today, my presentation is supposed to be about trading the Death Star, a stock that I kind of affectionately call the Death Star because it's taking over everything. It's literally in everything, and it's just simply nonstop. And that stock is Amazon, and it has earnings on Tuesday, and I think it's just going to be absolute insanity. But I'm not going to talk about it because unless you've been, let me just go through my personal account disclosures. Here are all my personal positions, so I always got to disclose that before we get airborne. But folks, we're literally living through history. This is 2016 all over again with what's going on in the markets. Let me get a show of hands, or let me get a reading of the room here. How many of you are either in GameStop, Nokia, AMC, or taking part in this rebellion that is currently going on in the markets? We'll talk about Amazon towards the end of my brief, but this is absolute insanity what's going on with brokerage firms, with hedge funds run by Ken Griffin of Citadel and Stevie Cohen of SAC Capital. This is it's absolute insanity what's going on. How many of you are in some of these? Oh, good to see. Robinhood customers sues over removal of GameStop. Okay. All right, good. Well, because this is what I want to talk about. We'll get towards Amazon towards the end, but folks, you're living in a revolution. Okay, this is literally a revolution going on. Just before I jump into this revolution, let me quick introduction for those of you who know me, folks, because I've been on both sides of the revolution that is breaking out literally as I'm speaking to you, and I'm going to tell you which side I'm ultimately on, which is yours. Unlike your broke firm that you trade with. Folks, my name is Matthew Buckley. My call sign's Wiz. Flew the F-18 Hornet for the United States Navy for about 15 years. Graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and also did some 2 combat deployments to the Persian Gulf. So what's that have to do with trading? Absolutely everything. My first and last day of work at American Airlines was supposed to be September 11th. So up until that point, I'd kind of traded on the side as, just kind of a hobby. And after losing my job in the blink of an eye on September 11th, I kind of turned to my investing kind of full time. And what did I do? I just kind of applied everything that I was learning as a fighter pilot to my trading. Having a strategy, implementing tactics that supports the strategy, contingency planning, what go wrong during this flight or this trade that I can talk about now before I get into it. And it just kind of made sense. It worked perfectly with trading. And I was interested in finance. I wanted to be a Navy fighter, achieve that, but in the background, I bought my first mutual fund when I was commissioned an ensign in the United States Navy in 1991. So I've been trading for about 30 years. Eventually, after I got furloughed from American Airlines, my trading and a bunch of stuff worked out so well that I eventually popped up on the radar of one of the largest volatility arbitrage firms on the face of the planet. And it's headquartered right there in the beautiful Chicago Board of Trade. These big, beautiful windows were our trading floor. I helped build a hedge fund when I was there. I helped build the retail brokerage that many of you know as Options House, which was Trade Monster, which is now E-Trade. Big incestuous relationship with those folks. And to be honest with you, I lived what we're going through right now in this market. I felt like Eddie Murphy in Trading Places, kind of little old retail trader going up against the big leagues. I was a managing director of a $2.5 billion firm, and I also built what was known as the Options News Network, kind of the CNBC for options. So I was on the floor of the CBO and the CBOT, giving you all, the retail trader, a behind-the-scenes look into what was going on Wall Street. And now, today, and last night, you're really getting to see what's going on between Wall Street and the retail traders. I also do some charity work with the Broward Insurance Council. I lost a sister to a drunk driver, unfortunately, when she was in college. So I work with MAD. And then this past year in 2020, after just blowing the doors off of the market last year as the quote smart money sucked, I started a foundation called the Top Gun Fighter Foundation to try and prevent veteran suicide. We're actually having our kickoff event tonight down in Fort Lauderdale, so really looking forward to that. So that's just a little bit about me. So let's go ahead and get airborne. I'll at least start my solo Amazon presentation, then we're going to jump the fence and talk about current events because my phone's blowing up. I'm in a mastermind group of hedge fund managers and family shops and Pentagon folks and just a smart group of people. So I'm trying to multitask here with what's going on in the market and my presentation here. But let me be brutally honest. You ready for this? This might shock you or it might not after the past 2 days or the past week, I guess, with everything that's going on in the markets. Wall Street's lying to you. Now, it might be shocking to some of you, but it might not be. But literally, folks, how many of you have heard this Wall Street ism? Hold on. Let me shut off this other presentation in the background. How many of you have heard that Wall Streetism, right? You can't put all your eggs in one basket. How dare you? Right? You have to diversify. Diversification is important. You can't. Guess what, folks? That's a lie. I'm going to say it in my whiz speak, and then I'll show you somebody who says it nicer. Diversification is for stupid people. Period. You ready for this? Who told you to diversify? That dude. Whenever you hear the term broker, stockbroker, yacht broker, aircraft broker, anything with the word broker, you can delete the word broker and insert the word what? Commissions. Folks, brokers work on commissions, man. If you've seen the movie Wolf of Wall Street or the movie Wall Street or Boiler Room, all right, boys, pick up the phones and start calling our clients and get them into this stock. Hi, Mrs. Johnson. It's Steve from your brokerage firm. You have to get into this hot stock today. It's a must. Wait, Steve, you called me yesterday and got me into this one. Well, this one's hotter than this one from yesterday, right? Churn, folks. The word is churn. They would churn your account. They want you to trade as much as possible to make money on commissions. Now, today, they also make money on what is called payment for order flow. But folks, let's get back to the diversification thing. They churned your account to make monies on commissions. Why? Using the BS term diversification. Warren Buffett says it nicer than I do. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Right? You do not need to diversify if you own one stock, and that stock is Amazon. Folks, look at the pictures. I'm a picture guy. Look at that picture. It's a hockey stick. It goes straight up. Their annual revenue goes straight up. And the pandemic, you heard me, it's called a pandemic. The pandemic was the best thing to ever happen to Amazon. Everybody locked in their house, shopping on Amazon, and getting a stimulus check every once in a while from the government. How about this picture? Amazon annual revenue by segment. AWS, folks, is essentially Microsoft, but AWS wasn't even a profit center back in the day. Now, I'll bet you Tuesday, it's about up here. International, North America. Look at the revenue by segment. Now, I'm going to shock you with this picture. If you 10, 15 years ago had shown me this chart and said, and deleted the name and said, would you invest in this company? I would have laughed. Look at their sales. Look at their free cash flow. Look at their profit. Folks, this is not your father or mother's stock. Jeff Bezos is on record. I think he says it every earnings period. He's like, I don't want to make, he's like, if I make a profit, I spend it. Why would I want to make a profit when, with the money that we make, I can go deploy 3,326 satellites in a low orbit? I can go buy out a competitor. I can go put somebody out of business. I can innovate. Folks, Jeff Bezos is like, this company will never have a dividend, and I don't want to make a profit. Old stock market thinking, folks, I would have laughed you out of the room. Today, I buy Amazon with both hands. I have 200 shares of Amazon in this account over here. I have 4 synthetic stock contracts over here. I have about close to $1 million in Amazon, folks. But if you're going to buy a stock using old stock market thinking, you never look at Amazon, and you'd be wrong. Look at their Amazon Prime Day, folks, has almost become a national holiday. You know how even if you went to the Postal Service to say, hey, I'm going to send you something overnight, what word do you use? I'll FedEx it to you. FedEx has become an adjective, right? Or a verb. It's an action. Even if you use UPS, you're like, I'll FedEx it to you. Amazon Prime Day, people have on their calendars for a year. It's turning into like a 2-day national holiday. So, folks, at the end of the day, I'm not even going to go through case studies to waste time. There are some risks, obviously, to trading just one name, a solo stock. Anybody ever hear of the company called Lehman Brothers or Bear Stearns? Jim Cramer knows about Bear Stearns. At the height of the financial crisis, the guy looked like Khrushchev at the UN. He took his shoe off and was pounding a table about how you're an idiot if you don't buy Bear Stearns. It's a buy. It's safe. 2 days later, it was at zero. Anybody ever hear of Pets.com, Enron? Folks, that I could spend the rest of my time in this presentation going through the graveyard of stocks that go to zero, right? They can. I've been in a couple. It's a tough lesson to learn, but guess what, folks? What's the one common theme between all of those names? They didn't own a thing. Pets.com owned a stinky sock puppet and a domain name. Enron they didn't even own the building they were in. They were a middleman of electricity. Lehman Brothers and Bear Stearns owned paper. And when the value of what they owned on that paper went down, it was a run on them. So they didn't own anything, folks. Then there's political risk in owning one name, right? Amazon and the Washington Post with Jeff Bezos was the bane of Trump's existence. The guy would grab his phone every other 8 months to a year and rip apart Amazon. It's a monopoly. It's destroying the post office. The Washington Post is a lobbying firm. And what happened to the stock? Nothing. But there are potential political risks, like we need to break up Amazon. It's a monopoly and blah, blah, blah. Well, guess what, folks? It's too late. Amazon's like Mercury. You break it up and it's bigger. The parts are bigger. About 6-7 years ago, I got a call. I used to fly for FedEx. I had a buddy call me from corporate. He's like, dude, I just heard that Jeff Bezos is leasing 5 airplanes. And I said it then. I predicted it. And I'm like, he's building his own. He's going to suck on UPS and the FedEx and the U.S. Postal Service and then build his own. Amazon Air right now will be bigger one day than UPS and FedEx. Okay? So I get that there's regulatory concern, but right now, if you broke up Amazon, like AWS, Amazon Web Services, it's like Microsoft. Amazon Prime, folks, they have an entertainment division. Okay? So I'll tell you how I like to laugh and tell people that I wear 2 suits at Top Gun Options. I wear a flight suit. I'm going to tell you how I feel as an American. As an American, I think Amazon's a disgrace. I think Jeff Bezos is a disgrace. He's the richest man in his world, and he pays his employees nothing. At the height of the COVID crisis, they didn't even have masks, right? I think it's a disgrace, and it should be broken up. Then I'm going to get bipolar and turn into this guy. I'm going to put on my $10,000 Armani suit and say, I don't care about all of that stuff. I want to make money. So I jokingly say I am. I'm a little bipolar here because this is kind of a hold your nose trade. I'm long Apple. I can't stand Apple. I can't stand Tim Cook. They use slave labor, the Uyghurs, in camps. There's kids actually, in concentration camps making your iPhone. Apple's a social justice. Look at Nike, Colin Kaepernick. They make shoes in concentration camps in China. Nike's a socially aware company. Come on, folks. They're not. Nobody talks about that. I do. Anyway, what are the benefits of just trading one name? Well, man, you trade that name and you're going to profit potentially no matter which direction it goes. If Amazon goes up, we can make money down or sideways. That's the awesomeness of being an options trader. You're going to stay focused on that name instead of a bunch of different ones. You become an expert in that name, reducing time spent on other positions. I have a buddy who's an Apple market maker. He doesn't know that a stock market exists. He doesn't know what the VIX is. He doesn't care about anything other than Apple. He eats, breathes, sleeps Apple, right? Now, let me show you a portrait of a cockpit real quick. This is an F4 Phantom. Looking at that cockpit gives me agita as an F-18 pilot. Why? There's 300 switches and dials. The pilot would spend a lot of time what we call heads down, like looking at all this stuff instead of looking out at what? Potential threats, AAA, anti-aircraft artillery, or SAM, surface-to-air missiles, or enemy MiGs. This was a very labor-intensive aircraft, right? Very labor-intensive aircraft. Matter of fact, they had to throw a guy in the back seat just to run the radar. Why do I use this as an analogy? Because many retail traders are flying an F4 Phantom. I remember one of my buddies down here, he's a doctor, he's an orthopedic surgeon, he's a brilliant guy. Spends 8, 12-hour days in the operating room or in the office. When I met him at Starbucks one time, a couple years ago, to help him like sort out what he's doing as far as trading, you ready for this? The dude had 33 positions in his brokerage account. Thank God he's a doctor, because I fell out of my chair and hit my head. I almost died. 33 positions. Are you insane? There's no, he tried to go through them. Well, I think that's a pot stock. I don't know what that one is. Okay, this next one, I don't remember what it is or how I got into it, but it's really down. I'll just wait for it to come back to get into it. I'm like, all right, Doc, stop talking. You're done with all of this. So would you rather fly, I'm telling you, as a I do this for a living, 5 to 10 positions I do it full time, and that's enough. So would you rather be flying around in this jet or this one in this type of market? This is the Joint Strike Fighter, ladies and gentlemen. You know what this jet has? 2 flat panel displays. That's it. The jet is actually smart enough to limit the amount of information it shows a pilot at different points in the flight. The jet's like, he doesn't need to, or she needs to see this type of stuff. I got it. Clearly, you want to fly a Joint Strike Fighter. Now, if you're sitting here going, you know what, this sounds pretty damn good, but Wiz, the brokers got to me. They implanted that diversification DNA into my trading mind, and I must diversify, does not compute. Well, guess what? In this service that I'm going to introduce to you called Solo Amazon, we don't just trade Amazon. You know why? First of all, Amazon is pretty expensive, but check this out. If you do want some diversification, take a look at the ETF we also trade in this service. We trade XLY. It's an ETF that trades what? Look at about a quarter of this ETF is Amazon. You also got some Tesla in there, Home Depot, McDonald's, Nike, Starbucks, Lowe's, Target, J, Booking, TJX. So isn't that awesome? You could just trade Amazon for the rest of your life, simplify your trading cockpit, and have an absolute blast. Or you can keep flying around in that F4 Phantom and just get destroyed and get shot down. Simplify your trading cockpit. This is the best way to go. So how do we target Amazon and XLY for max profit? When you become a member of this service, we do it every Monday at 2 o'clock. We do a live trade brief. This Monday at 2 o'clock with Amazon earnings the next day is going to be a must-attend session. Step 1, I'm going to show you how to establish what I call a base position. A base position meaning we're going to hop in that Joint Strike Fighter, fly all the way out into the future, and get bullish on Amazon. Using options, we can go about 2 years out into the future and get bullish. Isn't that awesome? It's fantastic. It's definitely very awesome. Okay? So we're going to do that. And then after that, once we fly out into the future and we establish our base position, then we're going to trade the front months. We're going to trade What's the front month? Well, you're sitting in it, folks. A front month is January, February. These are the front months. So we're going to have, and there's a couple trades right there, a long-term bullish position and trading the front month. So there's already a couple positions that we're managing at that point, right? So this is awesome. I love this stuff. I'm very, very passionate about it, hopefully, as you can tell. And I'm a hell of a lot more passionate about it right now since what? It turns out that yesterday, Wall Street decided to stick it to you, to the retail trader. Now, my phone's blowing up and all sorts of stuff, so let's try and get current. What really is going on? Okay. I'm shocked that the SEC hasn't, that people aren't talking about this. Okay. More than half of all Robinhood users own some GameStop, and now they can't trade it freely because Ken Griffin maybe or somebody picked up the phone and this morning said, hey man, that's enough. We are getting our rear ends handed to us. They can only close that position, which means what? Those people make money. Folks, I've never seen anything like this in my life. The head of the NASDAQ yesterday, this lady on CNBC yesterday, isn't it funny? Did you watch the interview yesterday with Judge Wapner during the halftime show and Chamath? How dare retail traders do any of this? Go buy a bunch of stock in a company that has a lot of short interest. They don't know what they're doing. What? The Chamath guy was great. He's like, how dare you, Scott? And they're not doing any fundamental research. He's like, dude, do you ever hear of algorithmic or black box trading? Do you think that black box sits there and calls the CEO or does due diligence? It's trading momentum. So listen to me. When you watch, and I just pressed pause because I want to watch what CNBC's a cheerleader, folks. They're not going to have a Robinhood trader being interviewed today, will they? They need to kiss Ken Griffin, his rear end, Stevie Cohen's, Jamie Dimon. They need to circle the wagons around their Wall Street buddies today because they get interviews, right? CNBC is about making money, and they are a cheerleader for Wall Street. They aren't a cheerleader for you. I know this for a fact. I know these players in this thing. I've met Ken Griffin before. I was in this Chicago firm, folks. I know exactly what's going on. Robinhood is not for their customers. I'm sorry. Yeah, well, yeah, I can say that. They're not for their customers, which might be you. They are for their clients. They sell their order flow, folks. And remember, at the height of the financial crisis, when Stevie Cohen couldn't trade his way out of a paper bag and retail traders were making better trades, he bought RobinTrack. He buys the order flow so he can see what retail traders are doing. The first sentence in this Wall Street Journal article is all you need to know. More hedge funds are being hit by losses on the recent market turmoil. Can you believe this? A couple days ago, Ken Griffin had to bail out Melvin Capital Management and Mapelane Capital. Can you believe this? Former Citadel portfolio manager Jack Woodruff was getting destroyed recently. All these guys had to be rescued. Look at this. Stevie Cohen's asset management firm with Citadel and its partners injected $2.5 billion in emergency financing into some of these hedge funds. Why? Because you, me, the unwashed masses, not country club members, don't have houses in the Hamptons, all these people banded together and decided, let's buy Nokia, AMC, GameStop naked and squeeze the hedge fund shorts. These hedge funds were getting destroyed, losing a lot of money. So now we don't like the game. In 2008, ladies and gentlemen, I was at ground zero, folks. I was in the Board of Trade and the Chicago Board Options Exchange when the financial crisis happened. I know exactly who caused it. Wall Street did. You bailed them out. I bailed them out. So let me get this straight. When Wall Street screws up, they get bailed out of by the government. But when the retail trader sticks it to Wall Street, these brokerage firms, all of them are doing it. TD Ameritrade was the first one to fire the shot yesterday. We're restricting trading in these names to look out for our customers, in air quotes. They're doing this because you're dumb and you don't know what you're doing. Dave Portnoy, the famous Barstool Sports founder, I think needs to file an emergency lawsuit. He's like, I'm losing millions of dollars because I can't trade this name. Somebody is going to have to explain why a public Reddit thread calling for individual investors to buy a stock is not okay, but billion-dollar hedge funds appearing on financial TV anytime they want to pump whatever stock they want is totally fine. Isn't that funny? Carl Icahn can get on CNBC. Of course, before he gets on CNBC, he buys $100 million worth of Apple. Gets on an interview with Judge Wapner. I love Apple at this price point. It's fantastic. Goes up $3. That's okay, folks? Of course it's okay. CNBC loves having a big name on their show. That's okay. But we the people banding together is wrong. Love or hate Donald Trump. In 2016, he said, you know what? I'm going to turn the lights on in Washington, D.C. and show the country the roaches. He did. You got to see what our government really does and looks like and smells like and tastes like. This is 2016 today, but in the financial markets. So, and the reason I'm kind of diverging off my solo Amazon talk here is because what happens? How does this end? This is literally going minute by minute here. Do regulators, the SEC, FINRA, step in? The Winklevoss twins, the Facebook Bitcoin dudes, were just on CNBC saying this. Like, what were the phone calls this morning? I'd love to sue and see what's going on and subpoena phone calls, email, chat records between these hedge funds and these brokerage firms, folks. There is an incestuous relationship between the two. They aren't restricting trading in these names because they're worried about, our customers. It's a lie. So when the Winklevoss twins kind of said that about an hour ago on CNBC, the reporters, quote unquote, the journalists went crazy. How dare you? And the one Winklevoss twin was great. He's like, hey man, you're a financial journalist, aren't you? Have you reached out to Robinhood today and demanded, are you doing your job as a journalist? Because they were going after the Winklevoss twins, like, how dare you accuse Wall Street of any malfeasance without evidence? Yeah, okay. Pull this leg and it plays jingle bells. But I love this. Robinhood customer sues over removal of GameStop. People, these retail traders that did this legally, this is capitalism allegedly in action. The people that did this legally are now getting destroyed. You can only close your shares. This is insanity, folks. Now, getting back to solo Amazon, and I have my own investment club here. We have 124 members in here, and we are all over this, man. We actually can push the market around as well. We have about, I don't know, maybe potentially 15 million just between us. It's a self-directed investment club, which means what? We all talk about our individual trade ideas, but we fire on our own. We don't we're not the beards down ladies and just kind of sit here and, we have one account where we blast through, but we can actually move the market too. There's nothing illegal about this, folks. You don't know how many times I went to dinner in Chicago in a smoke-filled room, after a big steak and a bottle of wine, and listen to these heavies talk about going after the next company that they're going to short or pound into the dirt, or what name they're all going to buy tomorrow morning at the open to pump it up and then dump it. Isn't that insane? This is absolutely insane. I can't even, and check, this is great. Class action complaint filed against Robinhood. This is about to get ugly, folks. If there is justice, which clearly for the past couple of years we haven't seen, there's laws for us and then laws for them. If I did some of the things that some of our elected officials did with emails as a pilot in the United States Navy, they would have kicked open my doors and arrested me. They would have pulled my top secret clearance and thrown me in jail and court-martialed me. But if you have a D or an R after your name, it's different. But if this lawsuit like actually sees the light of day and we can see the communication between Wall Street and these brokerage firms, this literally, folks, is Lexington and Concord. This is a you are living in a revolution right now, folks. You're living in a revolution. This is fantastic. I need to click on this and share this with my group. Good question. I'm going to get into that right now. So let's get back to Amazon real quick, because I think it's in this account. Which account do I have up? I trade two personal accounts. This one has Amazon synthetic stock. Excuse me. Amazon synthetic stock up about 13 grand year to date. Let's go to Amazon and take a look at the chart. What's been going on lately, let me pull up a 3-month chart, is kind of so here's what happens to most names. Let me look at the financials real quick. JP Morgan's a perfect example. There's a Wall Street-ism that is known as, you ready for this? Buy the rumor, sell the news, right? You can't see it, but right here, there's a little E. That's for earnings. So the financials, Goldman Sachs, Morgan Stanley, JP Morgan, all ran up going into earnings. Buy the rumor, sell the news, the rumor of good earnings. Take a look at what Microsoft, Apple, and Apple's a good example. Look at this, folks. You see anything? There's the little E thing. We had earnings yesterday. Buy the rumor, sell the news. And this is another reason why retail traders really hate Wall Street. When I started trading as a young man, I'm like, I think Apple's going to have great earnings. I'd buy Apple. Apple had great earnings, and the stock went down. And I used to be like, oh my God, am I an idiot? I can't be this stupid. Well, I wasn't. Now I've learned, and I share all these lessons learned with you. Stocks tend to run up into earnings and then sell off on the news. It doesn't matter how good they are. Now, let's move over to our main topic, Amazon. I don't know if that's going to happen. In the history of Amazon, I'm going to say 60% of the time, anecdotally, I've been trading Amazon for decades. I remember when the dude was sitting, his office was essentially, he was on a card table, right, selling books. There are earnings that, look at this, rip your face off rally. I mean, there are gap moves most of the time with Amazon. Like, holy crap, I can't believe. And can anybody point out something weird on this chart? Let me show you something. What's been going on for the past 6 months in Amazon? You ready for this? Or more to the point, since November. What happened in November? And we have flatlined in Amazon, which hasn't happened ever in Amazon. What happened in November? Black Friday, Cyber Monday, and then Christmas. This is the first time in the history that I've been trading Amazon, they have been as quiet as a church mouse. Why? How many of you at the height of this COVID crisis heard the populist, the masses yell out, we need to shut down Amazon, Target, Walmart. They are destroying small businesses. This pandemic has only helped Amazon. Amazon has been, they've been taking a flamethrower to Amazon. Have you heard a word from Jeff Bezos? For the first time since I've been trading Amazon, they didn't come out after Black Friday or Cyber Monday and go, oh my God, we've never seen anything like it. They did not come out after Christmas and go, our sales were insane. They haven't said a word. Which tells me one thing, two things. It tells me that they're smart, that they get the populist, they don't want to be a target, but it also tells me that potentially on Tuesday, it might be insane numbers. Legally, they have to tell us the truth. Between us friends here, they might not. Remember, companies can do all sorts of weird stuff. We printed money last quarter. However, we're taking every dime and putting it into our space program, and we're actually showing a loss, and the stocks could get hammered. That could happen, folks. We all come on. This ain't our first rodeo. We all know that these Wall Street companies can play some tricks with their books. I don't. It's a threat. As a fighter pilot, as an options trader, I just don't look at the good in something. I look at what the potential threats are. How can I get shot down? But me, I got two screens up here with two separate accounts. Over in this account, I am long 200 shares of Amazon. So I think they're going to have blowout numbers. I mean, I just think it's going to be absolutely insane. But again, I got to hedge my bets here and say, I could be a reserve. There's the distinct possibility that I could be wrong. I don't think I'm going to be, but we'll see. Okay. All right. Hey, real quick. I only have 8 minutes left. I know that was a little scattered, but oh, good. A couple trades we already placed. That was quick. TGO is the smart money. Folks, I gotta tell you something. You are the smart money. Don't ever use that term again. You look at these people. They were the smart money. Hey, there's a bunch of hedge funds shorting these names. If we all got together as a group and bought the stock, we could make money and put a little paint on them. That's smart. Don't ever accept to hear the term on CNBC like, oh, well, this is the smart money. What? Last year in January in the Davos, remember Davos, the annual Davos meeting, all the beautiful liberal, the limousine liberals sit in Davos. They all fly there in their private jets, of course, and then yell at us about climate change. But in Davos, Ray Dalio, Bridgewater, the largest hedge fund manager on the face of the planet, said cash is trash last January. And then February, March, the markets imploded and whatever. We made millionaires here at Top Gun Options. If you had listened to Ray Dalio, you'd be broke. Anyway, real quick, solo Amazon, if just come hang out for a month. I mean, like I said, I'm launching our foundation tonight in Fort Lauderdale. I guarantee I spend more than $97 for a couple drinks tonight. So for the price of essentially a nice drink, you can get access to our solo Amazon service. So I'll put the link in the chat box there. It's $97 for a month. And not only that, you get access to our 3 manuals. These are required reading, man. These are your flight manuals, the primary, intermediate, and advanced workbooks. These things are worth their weight in gold here. Now, let me do some political science math for you. If you went to my website right now and tried to buy these manuals, you'd spend $197. So for all the guys from Jersey and political science majors like me, check this out. Wait a minute, you're charging me $97 for the month, but it's $197 for the man. Yeah, you just made $100. This is what my marketing team, I'm like, hey guys, the math doesn't work here. They're like, no, it's called an irresistible offer. I'm like, okay. Well, there's your irresistible offer, folks. You get access to the solo Amazon brief, which is every Monday at 2 o'clock. Now, if you're sitting there going, all right, Wiz, well, Monday at 2 o'clock, I work for a living. Folks, listen to me. Everything's recorded, and during the briefs, I send out emails and text alerts live. Normally, our briefs are $167 a month. Solo Amazon is only $97 a month. So again, there's the link. This was our 2020 performance. What's our year to date? Hold on, let me line numbers down. That was year to date last year. Here's my brokerage account. Amazon, I'm up $6,200 so far year to date. So already a good start to the year. But this was 2020 was fantastic. We had a great time last year. Can attend, like I said, most of our folks work, but I send out text and email alerts. There's an example of a text alert that went out, a new bull put spread on Amazon, and then guess what I also do? At the same time, I fire out an email that has a screenshot of the trade and a screenshot of the risk metrics, okay? And then the link for solo Amazon is in the chat box, okay? And then, like I said, about 30 minutes after the brief, we post the replay, okay? You get the manuals, you get everything. Access to the brief, the text and email alerts, the manuals, and you also get access to our ready room. There's some case studies I'm not going to waste your time on. If you want to do an annual membership, I'll tell you what, I'll give you a 25% discount if you're like, hey man, this is awesome. This guy knows what he's doing. 25% discount. It's just add this at the end of the URL, topgunoptions.com/ this is easy to remember, solo annual. Okay. If you put solo annual at the end, I'll give you a 25% discount. Okay. Yep. There's the link. The link to the monthly is in the chat box, and then I'm just telling you, change the end of it to solo annual if you want that 25% discount. That's clearly the best deal. Okay. Solo Amazon, folks, it's our newest service here. It's hot. People like it. They love just trading one name. They like simplifying their trading cockpit. Instead of $167, it's $97 a month, mainly because we're only trading two names, Amazon and XLY. Folks, simplify your trading cockpit. If you got 33, 50 positions, whatever it is, you're nuts. You're going to get shot down. Simplify your trading cockpit. Jump into an F35 and trade Amazon, trade XLY, especially now. Sign up now, because Amazon earnings are on Tuesday and you want to know what I'm doing, okay? All right, folks, I want to keep Anna and her crew on time, and my phone's blowing up. There's a ton of stuff going on. This is insane. You are living through financial history right now. You do not want to fly around this market solo. Fly formation with me here at Top Gun Options. I'm putting the ladder down. I was a retail trader, went to be a pro, and said, hey, man, I can't stand you folks. Let me go put the ladder down and help out mom and pop, and that's what I want to do. I already got mine, folks. I already got mine, and this is just, I'd be doing this. I do this anyway by myself. I just love doing it with a bunch of cool people. Okay, all right, folks. I'm going to get going. Have a great rest of your day. Happy hunting. Make sure you hedge, and welcome aboard to all of our new solo Amazon members that are joining as I speak. Okay, we'll see you.
Okay, everybody. Thank you for being here, and thank you to Matthew for that nice presentation. I'm not a fighter pilot, but I'm a fighter. And I want to today do something a little bit different than my usual presentations. I put together something very orderly because I think what you're about to hear is going to affect you. I think it's going to be, very important that you grab a paper and pen and stay with me on this. I'm going to try to slow down a little bit, not be my usual fast pace, because what has been happening in my life and the life of the traders that have been with me over the last, especially the last 6-8 months, has been quite exciting. And I want to show you what it's all about and take you kind of deeply into it. So please grab a pen and paper real quick, because I want to show you a 4-step formula that's working really well to stay consistently profitable so you can develop a steady income or build long-term wealth, or both. Okay. Give you a few seconds. Imagine this scenario. What if you suddenly found yourself building profit in your trading account month by month by month, resulting in your best trading year ever this year, 2021? What if you suddenly woke up every morning excited about trading because you had a trading plan that actually worked? What if all your dreams of financial independence and having your time be your own was the life you were actually leading? And that last part, having your time be your own, that to me makes everything else happen. Does that sound like a stretch? It must to some who have heard that kind of language before. I used to think so, until I figured out why only 10% of traders were making money, while the other 90% were literally financing that 10%. In the past 4 decades, I've managed professional trading rooms where I've monitored the results of groups of 60 traders at a time and saw exactly why some traders produced consistent profits and some could not get out of their own way. And I've used the exact same things I'm about to show you to manage millions for well-off investors as a commodity trading advisor, and used it during 2 years as a commodity specialist for Payne Weber, and just recently revealed it to a group of new and experienced traders through my online trading. The thing that allowed all this success is having a simple trading plan with just 4 key parts. Now, I've been in this a while. This is my lovely wife of going to be 40 years in July. And Tisha has helped me not only with my business, but to settle me down as a personal trader. She is a subconscious trainer and really the heart of the main thing that we've been doing for the last 20 years online, and that's helping traders with the mental and emotional issues. But what happened during the first 10 or 15 years of that, we were making traders disciplined to run their trading plans, and they had lousy trading plans. So we really weren't doing them any good by making them consistently responsible to a lousy trading plan. So I thought it was time for me to start to get into the mix of building trading plans and showing others the trading plans that I've built in the past and how to build themselves trading plans that make sense. But what that evolved into was, why not show them trading plans that have worked for me and now are working for others? I have spoken many times for the Traders Expo and other live events when they were live. They don't do that much anymore. Hopefully toward the end of the year next year, I'll be back on stage with them and others. They usually put me first because I'm running around the stage. I'm picking up the pace and introducing other traders. But I enjoy doing that because it gets me really in front of the crowd where I can get that kind of energy. I've met just about every trader that you've ever known. I knew Matthew, the trader you just heard from, when he had a small office here in Boca Raton about 10 years ago. He has built himself focusing on options and done very well for himself. I've known pretty much everybody in the business. That's John Person here, who I much respect, another terrific trader up here in Palm Beach. I'm in South Florida. But my work with my wife has really been the most rewarding thing that we've done. We do coaching. Here's a smiling Chris, who is the benefactor of the coaching that we do one-on-one and so on. But today, I want to show you the 4 major keys. Look, everybody knows that there are traders who are making money, and some are making big money. So what exactly are these 10% of the traders doing that the other 90% are not doing? Now, from my experience, I can tell you with 40 years of authority that those who are making money consistently have paid attention to the 4 primary keys that I'm about to express to you. And they may not have put it together quite the way that I have, but they have honored them and understood the importance of them. I found that putting them together in one trading plan is the key to long-term success and independence. In fact, there is an overall secret that encompasses the 4 primary keys that actually brings everything together and literally pulls you into trading success. And that overall secret is probably not what you think. It's not a particular technical tool like Fibonacci retracements or Bollinger Bands or clouds or candlestick analysis. It's having the ability to stick to your trading plan without wavering. It's having the ability to stick to your trading plan without wavering. So if you can build a trading plan that honors the fact that the primary need that you have as a trader is to have a good plan that will work only if you have the ability to stick to the trading plan without making dumb mistakes, because those mistakes are what kills you. And the best way to do this is to have a simple trading plan with elements that you understand and believe in. Understand and believe in. In fact, a good friend of mine who's written several books, one called Investors Quotient on Jake Bernstein, has recently said in another conversation I was in online, similar to this one, I followed him and I listened to his presentation. He also says that although you can do meditative things and keep your mind positive, the most important thing is that you have a trading plan that you understand the elements of and believe in. This way, when bad things happen in your trading plan, when you have 2, 3, 4, 5 losses in a row, that you don't get scared and frazzled, because you understand why those trades are being taken, you understand why you believe in it, and then you can go on to the winners that come after those losers. Okay, so important. Okay, let's get to the 4 primary keys that consistently successful traders make sure that their trading plan contains. Here's the primary key number 1: keeping your losses small, and very small is even better. I had to take a little drink there. Very small. The smaller your risk, the better in a trade. We've all heard this before, but do we do it? Do we do it consistently? Do you accept exceptions to that when you've heard a lot on CNBC or any of the talking heads? Are you over trading? Are you keeping your losses small consistently? Are you doing it? Look, trading is a risk business. If you don't take a risk, you won't have a reward. And the key is to keep that risk small, which doesn't mean that the reward has to be small. The most successful trading plans design at least a 2-to-1 reward to risk ratio in every trade. This way, even if your trading plan has a 55 or 60% successful trade rate, you'll be way ahead of the game. And again, that 1 in the 2-to-1 ratio has to be small, meaning no more than 2% of the total equity. I used to say 3%. I'm now saying 2%. Why? Market volatility has gone crazy, and I think Matt explained some of that and why that may be happening. As long as you have your stops in and you keep the 2% total equity rule intact, you can make trade after trade without the fear that you're going to get killed. Okay, so keep your risk small, no more than 2% of the total equity in your trading account. Okay, and 1% and 1.5% is even better. It used to be that you needed to have 3% in even a $10,000 account. Otherwise, you couldn't grab a lot of trades. But now with the micro contracts in the futures market, in the S&P, and in gold, and even in the mini contracts in crude and whatever, some of the markets that are trading futures, and the small positions that you can take in share trading, the small positions that you can take in the Forex market. What I'm presenting to you here applies to all markets and all traders. So everybody, please pay attention to this. Keep the loss small. 1 to 1.5 is even better, but 2% is the maximum. Why? Because when you keep your risk small, you ratchet down your stress level, and you'll be able to stick to your trading plan without wavering. Again, that overall thing we talked about at first that pulls everything together, that pulls you into the profitability, that sucks you into that winning 10%. When you keep your risk small, you ratchet down your stress level, and you'll be able to stick to your trading plan without wavering. Which brings me to key number 2. What makes the and I'm ahead of myself. Take what the market gives you. Okay, that is key 2. Take what the market gives you. Take what the market gives you is the rallying call for scalpers. Now, I'm not saying you should be a scalper. Hear me out on this. There is some positive benefit to taking what the market gives you. If you don't ask much from the market, you'll be able to take profits more of the time. All you need is a small move. You take your profit, you move on. Okay? Just keep putting small gains in your pocket, and believe me, that adds up. It just makes sense until you start looking at all the profit you left on the table when a market decides to run and you got out way too soon. And this feeling of I should have stayed in starts gnawing at you, and you get pulled off your trading plan. That's not good. You start over trading to try to get back some of that money you left on the fictitious table. And that leads us to primary key number 3. Let the market run. But wait a second. Wait a second. How can one key be to take a short profit, aka take what the market gives you, and another key be to let the market run? And the answer is have both in your trading plan. You see, if your trading plan accounts for only let the profits run, you have to leave room for it to run. And by room, I mean room for it to pull back during the run. And when the market pulls back, it may actually be reversing, giving back most or all of your gains, and sometimes moving a profitable trade into a losing trade. And that's going to result in you saying to yourself, why didn't I just take what the market gave me? This can result in revenge trading as you try to get back what you gave up when you let the market come back, wanting it to run even further. And that's going to lead to, well, you know, big problems, big losses, blown out accounts, gut punches, solar plexus hits that take your positive expectancy away and just blows up accounts where you have to take months in a break and somehow you refund and do it all again. Some of the most successful trading plans that I've ever seen in my 40 years, and remember, I've managed 60 traders at a time, groups of them, responsible for their production and success. And the most successful trading plans that I've seen have both the ability to take a short profit and let the market runs. And to do this, you must initiate your position with multiple contracts. If you're trading futures or forex or options, that means a minimum of 2 contracts. If you're a stock trader, that means, say, 2 lots of 100 shares each, or 2 lots of 50 shares each, whatever. You see, by following both keys, you'll stick to your plan knowing that you've accounted for what the market gives you and the chance to grab a windfall profit if the market runs. Because in the end, the 10% of consistently successful traders have a plan they can believe in and follow without wavering. Okay, I hope you understand the magic that can occur if you have both elements, key 2 and key 3, in your trading plan. Number 1 was keeping your losses small, very small. 2 was taking what the market gives you. 3 was the letting the market run. And 4 is to have, well, I'm going to tell you right now, by having both keys in your trading plan, you take the questions and doubts out of your mind. No more chasing trades because you got out too soon. No more beating yourself up because you should have taken the easy money. Because from here on in, you're going to plan for both. You're going to have the ability to take short profits and let the market run. Okay, let's get to the final key, number 4, the high probability trigger. The high probability trigger. You can call it what you want. Getting off on the right foot, giving yourself a head start, but whatever you call it, it means that when you enter trade, you're going to do it with a high probability of winning. Now, how do you know that a trigger has a high probability of winning? You conceive it with technical logic. The technicals have to be there, technical reason, and then you test it. In fact, let me show you a high probability trigger right now and what that looks like. This is a high probability trigger tested by me and a couple of 100 traders who are now using it in a simple trading plan that I've created. Here's the trigger, okay? And I'm going to just take a few moments with this because this is important. What you see here are two candles, okay? The first candle is close to a doji, but we have to call it a spinner. Let's look at the long candle first, okay, so that you can get the definition in case you are unfamiliar with the definition. I'll just state it quickly. This is the price range. Let's say this is a 10-minute bar chart, which means that every one of these bars happened in a 10-minute period. And when the 10-minute period is over, another bar starts to be created. This green candle means that the market opened here and closed here, okay? A green candle means the market closed higher than it opened. And the body of the candle, this green part, according to the Japanese candlestick aficionados and those who created it as farmers back 300-400 years ago, even 500 years ago, this is the most important part of a period of time that you're analyzing is the open and the close. And so the body is created in a candle, gives you the open and the close. These wicks on the bottom and the top of the candle are trades that occurred outside the range of the open and the close. Okay, this is another candle that happened before this 10-minute candle. This is another 10-minute candle that opened here and closed a little bit lower here. That's why it's red, because the close is below the open. Now, if this were just a line and not a color at all, meaning that the open and the close were the same price, this would be called a doji, meaning that the open and the close were the same price, and the wick is usually very long, of course, in comparison to it, because this all occurred outside the open and closing range. In this particular example, in this particular trigger that I'm suggesting to you that you consider is the fact that we have a very close open and close range. There is indecision here, and that's the important part of the logic that I'm explaining to you here. This is a indecision candle. Okay, the open and the close are very close to each other, and therefore the market did not know what it wanted to do. There's indecision. In fact, there are buyers and sellers on both sides during these 10 minutes that are equal, so to speak, and that you have, it's a point of indecision. The next bar changes that. Now all of a sudden, as the market went higher, those who were short here had to cover. And by covering, I mean they have to buy in order to offset their short position. So that adds to the power of this candle. And what happens is that you have a major candle, especially, of course, compared to the indecision candle, that it determines a possible new direction. And when I say a possible new direction, this, I have learned, is a trigger that the market has a very good possibility of going higher. Indecision followed by a decisive candle is the trigger that I present to you here. Okay? Let's go on. Let's take a look at a chart that demonstrates this trigger. And the trigger is not always correct. Okay? Like any trigger, you won't have, but you want one that is consistently positive, works in a consistent, which is somewhere in the 65, 70, 75% range or more of this trigger is one. Let's take a look at the arrows. This is a 10-minute chart of the S&P. This is the mini contract. What you're looking at here is indecision, and it's important that we don't get a body this size. This is not indecision. This is about the maximum that you want to see a body of indecision. Okay, we have two relatively indecisive bars followed by a more decisive bar. I'm sorry, let's continue that. A more decisive bar. Now, the fact that we had a lot of trades outside the open and close range does not affect me, and it does not affect this particular approach that I'm explaining to you. One would be a seller here of two positions. Remember, I said you need to have two positions because you want one to be you want one position, half your position to be on the scalper side, and you want to let the other half run, okay, in this particular example. So the first scalp, what I like to do, and this is not mandatory, but where would the scalp be taken? I mean, you don't know what's going to happen out here. When this occurred, you don't know what happened. So a general rule that I like to use is to measure the size of this body and project it lower to here in the position, in the direction that I'm going. So in this particular case, I'm selling two positions here, and I'm I'm putting a limit buy on one of those positions at an equal distance extension to the size of this body. So it would be right around here. Okay. Now, and I'm putting my stop above the formation, a couple of ticks above this, whichever part of the two body formation that we've just described, that I mentioned to you, is higher. In this case, it would be the spinner or doji formation, and therefore my stop would be right up here. When I take my profit, when and if I take my profit on the scalp position, I lower my stop to break even. I'm always lowering my stop to, I try to get it to break even in a responsible way. In other words, what this means is that we have a power bar here. It's not a big, powerful bar, so I'm not asking much from the scalp, okay? And if this market is continues, so be it. If it doesn't, I want to get out and be satisfied with the scalp. In this particular case, what happened was the market looked like it extended. I took my scalp out here, right, moved my stop to break even, and right by the next bar, this market went up enough to get me out of, stop me out of my second position. Okay, I'm okay with that. I now have a winning trade. Okay, I'm looking for my next trigger, and here it is again. Now, this is a moving average that I like to use to see it cross before I take my trigger. Okay, it's not important for this conversation what it is because I can't give it all away. But I will say that to have a moving average that's 11 compared to 12, let's say, it's a big difference. So rather than guessing what this is, let's talk about it later. This right here, okay, is another trigger. Spinner, very small body, followed by a move through this moving average that I want to see before I want to see the move through this moving average, and then I want to buy two positions right here. Okay, I want to put my stop below it, okay, and then I want to put my limit sell on half that position at an equal distance to the body extended up here. So once this body ends, I have my finger on the trigger to buy two at the market. Okay, sometimes I get it right here, and sometimes I get it the first trade here. But whatever it is, I'm counting 58, 59 seconds, 60. Boom, I'm hitting my trigger, and I'm long here. Okay, two positions. I immediately put my stop in first. Okay, below the formation, and then I put my sell in for an extended move equal to the size of this body. That one took my profit right here on the scalp. The runner position continues onward. Now remember, I moved my scalp. I moved my stop to break even once I took this scalp. Came up, up, up. This body came down, hit my break even. Another scalp with no runner. I'm okay with that. I move on. Okay. Two winning trades, let's call them minor winning trades. Some people live off scalp trades like this. Not good enough for me. I want to be in there also for the runner. Here's another movement here. Now, this is important to note that this is a beautiful signal, and can't describe everything right now, but suffices to say that it's taking out a lot of the body bottoms of all for the last almost hour of trading. This is a 10-minute chart, remember. This is a movement, so if you measure it, we're looking at about 38.40, and our stop is about 38.50. In a mini contract, that's a $50. That is a $50 risk. Two positions would be a $100 risk. So if you have a $5,000 account, this is a trade that you could possibly take, okay? So it would be your full 2%, if my math is correct. You sell two here, put your stop up here. Again, you can't take the trade unless it fits into your account, because there's plenty of trades that will, okay? So here's a nice trade. Sell two here, put your stop in up here. Market extends. Once you put your stop in, you've got to put in your limit buy to take your scalp, and you would have gotten it in the next probably few minutes, okay? Then you move your stop to break even. Okay, now we're riding the trend. Okay, now I can't get into the most important, a very important part, an essential part of winning long term is taking your profit. And I will say that in this particular case, we would have, in our positions, taken our profit in this area here. Okay, and there are several reasons for that, but that's not the important part of this discussion here. We're talking about triggers, getting into trades, giving yourself the possibility of getting a long winner like this. I mean, this trade right here, which I believe I actually had, 38.40, you know, in real time. This was a 45-point move. Okay, that's a $225 move, I think, in a just a single contract. That's a nice move in just looks like about 20 minutes. Here's one that went wrong. Okay, here's a trade. Again, you'd have to measure the risk. This is a bigger risk thing here, so you may not have taken this, but if you did, in our trade we would have gotten out in this area. We have a reversal of a signal here, and in many of what we call nuances, they're choices by the trader to fit into what they believe is correct for them, and but doesn't affect the long-term outcome, and that I can explain if you come with me somewhere down the line. But here's another signal to go long. Buy 2 here, take your scalp trade out here, again an equal distance to the body, move the you would be taking that right about here, I think it looks like, and then you move your stop to break even. Here's another nice trade. So we've gotten some really nice trades here. Let's look at another chart. This is the euro dollar. This is the it says FX, but it just means foreign currency, foreign exchange. But this works also again for forex traders. This happens to be the futures contract on the euro dollar, which I love to trade, because even though there are many contracts which have enough volume in the euro dollar to do that, half contracts, even the full contract can fit into $10,000 accounts and more by buying 2 of them here. Look at, well, let's not go through the specific numbers because I want to take you through some examples, but here is a movement higher. You can see again movement higher, very nice. Here again, this is Zoom, which is a stock that I've been loving to trade since the pandemic. Look at this beautiful signal here. We got, and we would have gotten out right in this area here. Here's enough, and just enough to take another signal if you weren't already in. I mean, sometimes you're sleeping during this period of time. You wake up and you say, gosh, I wish I had been there. It'll give you signals along the way. Here's another one where we have a doji followed by a decisive move up. Okay, which got us all the way up here, and we would have been out in this area here. Here's another small body followed by a movement down, which would have resulted in a scalp trade. Another doji, love the doji ones, followed by a move through this moving average, sell it, and you have a doji, you have a small profit plus a little bit more. Looks like you would have gotten out with a small profit about equal to the other on the scalp trade on the runner, but no big runner there. Here's one that I've been really liking, but we only have about 15 minutes left, I believe. So let me kind of move through this. This is BioNTech. BioNTech. This is the stock that goes along with the not Moderna, but Pfizer, and you can see how this is they're making the immunity drug, and you can see how it works so nicely here. My wife is a big trader of this stock. You can see that you know, if you get in during this, you want to take a smaller share amount, and it would have worked out for you nicely. Even the scalp trade was a big trade, and right now we're long based on another trigger. And I believe we're up again today. This chart was made yesterday for you. Okay, and there are some things that I like to do to confirm certain trades using the RSI, and I do that not to say I'm going to take the trade or not to take the trade. That has to do with the trigger and whether it's going through the right moving average. But I do it to possibly adjust my position size in larger accounts. Here's overstock. If you're a a trader, if you're a Bitcoin enthusiast, Overstock can really help you out because they're into blockchain, believe it or not, even though a retail store. Here's a beautiful move that would have, now a lot of systems may have gotten this anyway, where you're breaking out of a particular range. Although it didn't break out of this part, many wouldn't take it. We take it because we have the trigger. Undecision followed by decision. Boom, move up. This is not a trade. Why? Because this is not indecision. This is too big a candle. Now, those that stretch the rules would have done well, but I think you would have learned the wrong lesson. Here's another beautiful trade. Look at this. Would have caught this overstock move that literally from $8. This is a move from $11, $12 all the way to $110. So I'm saying that yes, you get the scalp on half, and you can see how many times you get the scalp without the run, but it opens you up for these kinds of what I call lewd and lascivious profits. So let's review. The 4 primary keys to put yourself in the 10% of winners club. Keep the losses small. Take what the market gives you. Let the market run. And I've shown you that you can do both and use a high probability trigger. What I've just given you is an overview of an exact simple trading plan that I'd like you to own and try for yourself, because I want you to experience the same success that the other owners of this simple trading plan have. In fact, we have a private Facebook group that we discuss our wins and questions. It's just terrific. It's a club that we've put together that's trading exactly what I'm going to show you, but knowing how to get out of trades and other things that I haven't shown you. I just wanted to show you the importance of triggers and the importance of having the ability to take a scalp and also be there for the long wins, okay? This simple trading plan, it's called loaded gun. And why? Because the trigger kind of looks like a gun, this being the trigger part of it and this being the barrel pointing to the sky. I probably could have come up with a better name for it, but it works. We call it the loaded gun because there is potential for an explosive move. This simple trading plan, loaded gun, has that technically logical high probability trigger. And I've just discussed with you the technical logic, meaning hesitation, expansion, and why it expands with the shorts covering and moving through a important moving average, okay? This probability trigger, okay, it gives you a head start on profitable trades. It gives you clear rules. This trading plan gives you clear rules on how to keep your risk low, very low. And I've showed you a little bit how to measure it properly so that you can move past any unsuccessful trades with ease. There are going to be some losing trades, but they'll be small, and move on to trades that are money makers and sometimes really big ones. And this simple trading plan will have you pocketing the low-hanging fruit, okay, the quick profits, while also allowing profits to run for those big windfall trades like I've shown you. So that you're not chasing trades, you're not revenge trading, you're not screaming at yourself for not taking a profit when you had it or not letting a trade run. Just imagine finally having a simple, logical trading plan, okay, that can lead you to the financial independence where you go where you want, when you want, because your time is your own. Here's what it looks like when you get into the simple trading plan. If you want to take advantage of this, and I'm going to make it so that you're going to want to, this simple trading plan, here's what you're going to access. There's, of course, some welcome videos that I do. The loaded gun explained. This loaded gun trading plan fits on one sheet of paper. That's why it's part of the simple trading plan way of thinking. It fits on one sheet of paper, and I explain it all in a couple of videos for you, and how to operate it in charts and so on, chart after chart. Then there are these things called nuances. This is where I realized by managing all the traders and of all kinds, whether it's PayWeb or whatever, I've noticed that every trader is a little bit different. Some need the action. Some have patience of a saint that are willing to wait for trades. Whatever that is for you, there are a few nuances here that you can employ. They're optional rules that you can put in that will make it fit you so that you can follow your trading plan without wavering. Again, that part of the formula that pulls you into success, having it fit you. That's why when you can grab somebody else's trading plan, it doesn't work for you. You say, why is that? Because it doesn't fit you. These nuances allow you to fit. And there's a lot of exiting nuances that allow you to customize them for yourself without affecting the long-term possibilities. And everybody's going to have about the same percentage gains along the way, but these nuances will help you follow it and do it your way. Loaded gun get-togethers. These are the videos. I mentioned I didn't mention it. Every month we get together on Zoom, and we have all those little boxes that we can all input and talk to each other about. And we share our experiences. We share the screen, show our trades in the loaded gun. It's terrific. And if you miss it, they're recorded, and you get to see the recording of the get-together. Subconscious trainings, we'll talk about that some other time. And but that helps you with the mental and emotional part of it. And the bonuses, there's one bonus now. We keep adding bonuses all the time. Okay, your simple trading plan loaded gun is available for a limited time for just one payment of $7.97. But I promised Anna that I would make a special price for those who attended this presentation today. So I want to give you $300 off. Yes, $300 off, so that your investment for a simple trading plan that honors all 4 keys that I've gone over today here, plus much more, is only one payment of $497. Or if you prefer, I've even set up for smaller accounts, I've set up a 3-pay option for you to take advantage also. I set up this 3-pay option so that the smaller accounts can get in on this too. Look, if you have a solid trading plan, smaller accounts become larger accounts. So you wouldn't be the first one that it happened to, okay? There's going to be, and you'll hear it in the discussions that we have in our group discussions and online. You wouldn't be the first, so why not you? And I want you to try this loaded gun trading plan at no risk. And just like this trading plan is a simple one, so is the guarantee. Take a full 60 days to back test the plan and then trade it in sim or trade it with real money. Whatever you want to do, trade it any way you want. Back test it, forward test it. Try it for 2 months. And if it's not the plan for you, just email me and I'll refund your money. No reason needed. The risk is mine. I'm not going to ask you any questions. Oh, what about a bonus? What's an offer without a bonus? If you act quickly, I'll throw in a 30-minute one-on-one Zoom session with me where we'll go over any questions that you have about loaded gun, the loaded gun simple trading plan. And they never seem to be 30 minutes. They always seem to be 45 minutes or even an hour. I want to know how you trade. I want to show you the nuances that may fit you to even make it easier for you. I want you to understand anything that you don't understand about this simple trading plan. So, but my time is limited. So this is a timed thing. 30-minute one-on-one Zoom test. You got to move fast on it. This way, if in this Zoom session, you'll fully understand the power and the consistency of the plan, and you can go ahead and start experiencing what it's like to be part of that 10% of traders who take from the other 90%, which maybe you used to be. Here's Peter Orange, is somebody who's relatively new. He's about 6 months in the simple trading plan. He said, I'm not sure if you read this. It was an email he sent me, but I'm now using loaded gun exclusively. I thought my problem was psychological when in fact my system just didn't work. I cannot thank you enough. And that was Peter's comment. But you have to act fast because the one-on-one bonus and the special pricing is only good until 5 p.m. today. In other words, a few hours from now. And the reason I did that is because I have seen that people who understand this and can see the power of it act quickly. Others that hesitate, and generally some of them, have been burned before, and I understand that. But many of them don't belong as traders because they keep doing the same thing over and over again. If this sounds unique to you, if this sounds logical to you, if I sound like the person that could guide you, this is something that I want you to take advantage of. Okay, remember, the risk is all mine. Here is the link that I want you to use: simpletradingplans.com/Anna. Now, if you just go to simpletradingplans.com, you'll see the basic page that looks a lot like the one you'll go to, but it's $7.97. Okay, that's where everybody else is buying. That's not on this trading plan. That's not on this presentation. So simple, and this page is going to disappear after 5 o'clock, maybe at 5:05. It's going to take me when I go into the back of the website or whatever. simpletradingplans.com/Anna. Okay, here's what it's going to look like. Anna, I know you're going to love this. I put Anna's Investment Expo Special. Okay, now I took this picture last night, or yesterday afternoon, but right now it says 3 hours or something. So you'll see me, and you'll see all the information in detail on what the simple trading plan is, giving you kind of reviewing what we've gone through here. But I've called it Anna's Investment Special. Expo Special, and it expires again at 7 o'clock. Here is the guarantee again that you'll see on the page. If after using this powerful simple trading plan loaded gun for up to 60 days, and don't think it's worth 5 times what you paid, I'll refund your purchase. That's it. No questions asked. That is my guarantee to you. I will be waiting for you there. That's why I'm not taking questions now. If you've got questions, I'll be in the chat myself. So until 5 o'clock, just go to the bottom. You see that little chat thing on the bottom right, and you can go ahead and click that. I'll be manning the chat in case you have any questions. Ted, who is he really participates in those monthly meetings. He wrote me recently, says, "Hi, Norman. Here are those completed trades from earlier in case you wanted to show traders that loaded gun works on FX too." So new FX traders, I wanted to let you know that Ted's having a pretty good time with it. So can you. Here's something from Gariso. Now, I've never met him personally, but he's been on before I did any one-on-ones. But he said, "You rescued me while right on the brink. I love the freedom trading success can bring." I love to read this because I get the goosebumps. This is what it's all about. The ability to earn needed income from anywhere on the planet where there is internet and electricity. The intellectual confidence to know one has a trading plan with a valid plan. Thank you. And he's in Zurich, Switzerland. The reason, and this is a registered nurse, Virginia. She's a registered nurse and a trader now. The reason I'm writing you is to let you know that what you've taught me has transformed my life. Okay, your passion to teach, I hope you're hearing it here, has not only greatly improved my trading, but has significantly led to great self-improvement. Thank you, Virginia. I'm really happy for you. Please try it out. The risk is mine. simpletradingplans.com/Anna. You'll have all the keys in one package. And I especially, again, want to thank Anna for the opportunity to present this to you. And in honor of that, of my appreciation, I have this link will live in infamy, at least until 5 o'clock.
So hello traders, I just finished teaching. I just finished meeting with my students, and I will share everything we have done this morning. It will be a very powerful webinar. Let's start, as I finished teaching literally 1 minute ago. Hello traders, this is Alla Peters. In this webinar, I will present to you how to trade institutional reversals on all instruments with the Alpha Fibonacci system. But first, I would like to remind you very important, very required disclaimer. I'm not a financial advisor, neither my incredible team. Everything I teach you to empower you how to trade with power, with precision, with institutional reversals, as played out this morning, as you will see in this webinar. All the content, all the software, all the products for your educational purposes to empower you as a trader. None of it constitutes as a financial advice or solicitation to buy or sell any instruments. All software, all systems demonstrated as is. And I hope you understand that trading any and all instruments require risks. So trades with risks you can afford. And remember that all testimonials from my students, including class and even this room from few minutes ago, are believed to be true. But my students' performance does not guarantee your performance. In order to trade as my students do, you must obey the rules of the Alpha Fibonacci system. In this webinar, we'll cover about Alpha Fibonacci trading system, how to trade institutional reversals and trade inceptions with the Alpha Fibonacci system. So let's make it very exciting and very powerful because everything plays out in the live markets now. I just finished the class where my traders trading this. With the Alpha Fibonacci system, you know hours, days, weeks, months, and years in advance where sell-off will play out from. You know hours, days, weeks, months in advance where institutions will step in from. You can view videos 24/7. And if I convert this chart, which is S&P E-mini futures chart, to any chart you choose to trade, we will be monitoring this selling pressure. It's playing out in front of you in this webinar. With the Alpha Fibonacci system, you knew this hours and days in advance. This is what Wall Street firms trade, this system. And if I convert this chart to 5, what do you see? This was market open on any chart you choose to trade on S&P. But you knew this hours and days ahead. As you know right now, when Alpha Fibonacci reversal zone is present, expect reversal. This is institutional reversal zone right now in the live webinar. What is intelligent and strategic trader knows? This is a crucial support in front of you. The response at this support level on S&P mini future will determine markets for the rest of the day. But how to trade this system? You must obey the rules. And that's what we will monitor throughout the webinar, how to trade institutional reversals and trend inceptions with the Alpha Fibonacci system. We will go over multiple examples, including live markets. We will look on future stocks, Forex, from before to now, and you will see how my incredible traders trade. And at the end of the webinar, I will announce very powerful gift to those of you who are serious about trading with institutions. Because what I will do in the month of February, I will not do again in 2021. Briefly about myself. I hold multiple degrees. I have an incredible family. I have multiple children and grandchildren. I invest in real estate, stock market businesses. I came to United States with nothing, with newborn on my hands. I made my first million by the time I turned 30. 2004, I was introduced to Fibonacci. I became fascinated. 2008, I developed very first proprietary Alpha Fibonacci strategy that remains the core of the system. 2011, I started Fibonacci Trading Institute, Fibonacci Trading YouTube channel, and Fibonacci Trading podcast channel. Since 2011, I mentor traders globally from beginner to hedge fund trader. So this is a couple of photos of my incredible traders. So take a look on Richard and see what Richard accomplishing right now as I work with Richard right now. Take a look on Emmanuel and Jennifer as she was in the room this morning. Sam is my dearest friend for life. Victor, hedge fund manager in Switzerland. Michael and Amy and William, who was in the room this morning again, are trading options. Sam put his daughter through Harvard, trading Alpha Fibonacci system. Carol, grandma in Texas, trading oil with the Alpha Fibonacci system. So, this is institutional trend reversal lifetime system for all platforms, and with multi-market scanner and proprietary Alpha Fibonacci software for Ninja 8. The core of the Alpha Fibonacci trading system is the institutional trend reversal and the institutional trend inception on futures, stocks, mutual funds, ETFs, cryptos, as traders trading globally system on instruments I've never even heard of. Because if it has pure price and if the platform has Fibonacci retracement, you can trade the system. This is my student this morning. I closed the room 5 minutes ago. As you hear, my voice is a little hoarse. This is a start with William. You will see his email and you saw Richard's photo. That this is what this morning started with. This is very funny. As Richard complaining, oh my God, I got only 12 points on S&P mini futures. Darn it, how is it possible only 12 points? Those of you who are knowledgeable traders know it is a lot, correct? Take a look on Richard's post later. I could have gotten 40-point move if I got up early enough. This was institutional morning traders. This was institutional reversal. We identified with the Alpha Fibonacci system days in advance. So Richard shares in this post, his account is up to $13,337 this morning on January 28th. So when you come to the website, this is always the best part of the website, where you can read and see and listen to what traders do. And if I go back to the home page, meet Richard and listen to Richard's podcast, listen to his journey, listen to his story. He started his account with $3,500 on December 7th. But Ken, very different trading cryptocurrencies on his iPhone. On the bottom, Richard shares December 7th, started trading live after doubling his demo. Ken is sharing since March 2020. Jennifer, whose photo you saw at the start. So what are you seeing here? This is community of traders who trading any instrument they choose. Jennifer and Adnan trading NASDAQ on this institutional reversal points. Emmanuel, Jennifer's husband, brought her to the course, and his best friend Adnan, NASDAQ 27 and 30. Bill is trading S&P. And all of these traders share this trading morning with institutional reversals. Your trading was only a couple of minutes. Preparation is the key. Jennifer traded 5 minutes. Adnan traded 9 minutes. At the actual traders, this is the power of trading institutional reversals. So look at this chart this morning. You are looking at very different market. Buying institutional bottom is very different than staring at the chart when nothing is happening here, because if this support respects it, intelligent trader will be on sidelines. There is no sell-off. Price is frozen. Price is stuck, as I said at the start. If this support is respected, no matter what chart you trade on S&P or Apple or Pound or Amazon, it's exactly the same Alpha Fibonacci strategies. Sell-off has started on January 26th. On January 25th. This morning, price is stuck in chop. And that's very powerful institutional reversal morning with my incredible students, those who are serious about trading, trade only with institutions and never, ever, ever against them. With the Alpha Fibonacci trading system, trader knows far in advance institutional reversals and institutional entry points. All depends on the chart you trade. If you're a day trader, it is hours and days in advance. If you're a position trader and you're using long-term charts, weeks, months, and even years ahead. So what would your trading be like if you traded with institutional reversals in 2020? What would your trading be like if you took advantage of this rally? Let's take a look on S&P E-mini future, which reflects 4,000 plus stocks in US markets, and how Alpha Fibonacci system identified institutional sell-off and institutional rally months in advance. Here is S&P at the start of 2020. What do you see at the bottom? Please tell me. Do you see 2200 level where it says reversal zone? So strategic trader who understands what identifies institutional sell-off is not surprised at the crash of 2020. Strategic day trader took advantage of sell-off. Strategic investor and options trader protected the profits or took advantage of the crash with options. You decide what you want to trade with the system. System identifies many months ahead how crucial 2200 level will be. March 23rd, sell-off reaches this institutional buy point. There is no good news. On the news market in panic. This is the worst Thursday in many, many years. On the chart market finding support. On the chart market rallying. Institutions and top 1% buying everything. How is it possible? This is the worst economic conditions. This is the worst market events. There is no fundamentals that support this rally, none. So when bullish rally keep picking up this steam, intelligent trader sees very different market structure. When price reaches alpha Fibonacci reversal zone identified in advance, market not selling off. Market continue respecting alpha Fibonacci support again and again and again. And price keeps respecting support this morning. There is no institutional sell-off. Do you understand that? This is a market this morning. Intelligent trader understands the difference between buying the bottom versus buying the top. So if you were buying S&P E-mini future the last week in March, in April, in May, in June and July, versus now, this is very different market conditions. Very few gems are present. The gems this morning were a stunning reminder of the importance trading with institutions and not against them. And that's Alpha Fibonacci system. on S&P mini future for the last 14 months. And that's the system in front of you right now, and how traders trading it this morning, all in advance, never after the fact. So if you knew in advance institutional buy and sell points, institutional reversals and trend inceptions, would you trade with much more precision? Would you trade with much more power? Would you sleep better at night with your long-term investments and your option trades? This is what Richard has done. As a physical therapist for over 45 years, he lost a fortune trying in trading. But the moment he heard my last year's webinar, he signed up the same day for the course. He suffered $6,000 loss right prior my podcast. That did not stop him. He saw the quality of the system right away. With a market replay on demo, he doubled his account. And since December 7th, you saw what he has done in the trading room this morning. So please listen to Richard's podcasts on our podcast channel and on our home page. As you saw, Richard was complaining this morning, only 12 points on S&P. As every trader who understands what S&P is, if you manage 12 points per week, it's spectacular week, not per day. And that's my students who obey the rules, trading with institutions only as strategic alpha Fibonacci trading chess. So we already reviewed markets from this morning, correct? We already looked on day trading S&P, and we already looked on S&P long term for the last 14 months. So if you understand that the system-based indicator-free and consists only of two components, pure price and proprietary alpha Fibonacci retracements, you will never, ever need any other system. You will never need another indicator ever again. So if you decide to trade 1 minute, 5 minutes, if you decide to trade hourly, daily, weekly, of course you can. So let's dive straight to Apple, shall we? Let me remind you what played out on Apple. 2015, 2016. Apple selling off from institutional reversal zone. Everyone in shock. Apple comes out with the worst earnings in 13 years. But what does intelligent alpha Fibonacci trader knows? No matter how brutal the earnings are, the most important part, if Apple would respect and obey alpha Fibonacci support. Correct? Is everyone seeing this? Are you with me? Despite worst earnings in 13 years, alpha Fibonacci support, this bright pink line, is the most important support level on any instrument, is obeyed and respected. Apple doubles in value, despite worst earnings in 13 years. And many months in advance, you know what decision point to next crucial target on Apple will be. And many months in advance, you know where reversal zone on Apple will be. You understand many months ahead that this support on Apple is crucial. And what do you see at the bottom? Tell me. 140 level, ultimate low, ultimate place to buy Apple from. So when Apple's selling off, when Apple in free fall, no one is surprised. All precise. And when Apple rallying from 140 and selling off again from 216, as an investor, you knew this months and years in advance. And that's the power of this system on any instrument you choose to trade. Here's a bright pink line in front of you right now on S&P. There is no sell-off. This is junky, bearish pullback. It's meaningless. Bullish rally overextended, but sellers are weak. And if I take you back to 1 minute chart, exact same thing that played out on Apple played out on S&P. Price is not crashing. Sellers are weak. We left the pointer here before we went to Apple. Intelligent trader not shorting S&P. Intelligent trader on sidelines. Understanding the power of crash versus chop versus bullish reversal. And that's the decision you have to make. What instrument would you like to trade? Choice is yours. So when you see Ken's video on our homepage, and when you listen to Ken's podcast on our homepage, this is the update from Ken this morning. Ken is a movie maker. Ken is trading system on the iPhone, on long-term charts, on weekly and monthly. It is very different than what Richard trades. As you can listen to both podcasts from Richard and Ken on our podcast channel. Ken is making serious effort. Crisis is opportunity. All of his jobs were canceled. He had no way to make a living. So he trades options with the Alpha Fibonacci system on cryptocurrency and stocks. So when you come to our homepage, this is Ken's photo. Please listen to Ken's podcast. And that's community of our traders. You saw Jennifer's and Ednan's post. Her husband Emmanuel brought us to the course. Brad went from making $10 an hour to $3,500 per day. This is a videos traders make about their lives. All of them had been through many years of struggles and lost a lot of money before they came to Fibonacci Trading Institute. The Alpha Fibonacci system benefits include crucial critical moments. When trader trades at key institutional zones, you're spending very little time in front of the screen. As you saw, the students were making comments. This morning, 5 to 10 minutes trading with institutional reversals. Babysitting the chop, babysitting correction, there is zero reason to do. Right now, this chop had been lasting in the markets for the last 40 minutes. There is no reversal here. Reversal was at the bottom. Market is stuck now, and this chop can last for the next 2 hours, 8 hours, for the next how many hours. This is crucial support on S&P. When rules are met and this support is out, market will sell off. There is no sell off, only chop. Staring at the screen, Zero reason. So what would your trading be if you traded with institutional trend reversals and institutional trend inceptions? You would be one of my students who would be making posts about your journey preparing for trading. Trading with institutions, very few minutes per day, is the core of the Alpha Fibonacci system. The first crucial step to strategize as institutional traders do to identify institutional trend reversals prior to placing a trade. And if you understand what institutions trade and where institutions trade, you come to the screen when institutions take positions. You don't stare at the screen aimlessly. You don't stare at the screen for hours. There is zero reason to do that. If you obey the rules of the system, the skies are the limit if you are trading with institutional power. And that's crucial, critical first step of the system. And this is what I was teaching in the webinar right before this presentation. And you can view videos learning this 24/7. So this is what traders have done at institutional levels. As you can see, traders trade Dow, traders trade S&P, traders trade stocks, options. Every single trader, different account. Every single trader, different instruments. It is absolutely every single trader's personal choice. This is prior. As you can see, every trader, absolutely very different trades. So here's a system on S&P mini future. This is how simple and pure system is. Pure price for entry and alpha Fibonacci for exit. You will never need anything else. And if I bring up to your attention the system in the markets right now, this is a system in front of you. Why in the world would you ever want to block price? Tell me. System is showing you clearly right now. Price is stuck. This support is crucial. Bullish rally overextended. Nothing good plays out at the end of the trend. When market not reversing, when market is frozen, do not babysit the chop. And that's trade recognition software for Ninja 8. And that's multi-market scanner. Market is quiet, traders. Scanner is quiet. But if you would like to insert multiple instruments, you can do so with a single click. Single click, and you can enter Dow, you can enter NASDAQ. You can enter any instrument you would choose. So if you're trading institutional reversals with pure price for entry and alpha Fibonacci for exits, you will never need anything else. You can apply it to Apple, to S&P, to cryptocurrencies, to Bitcoins, to stocks, to options, to Forex. You can also do this on Amazon. Of course, this is Amazon mid-trend 2018. Many months ahead. What do you see? Institutional reversal zone at 2000 next. Many months later, Amazon reaches reversal zone. And when all the rules are met, despite excellent earnings, Amazon in free fall at 2000 level. And when 2019 Amazon reaches this level ahead and sells off again and again, no one is surprised, all precise. And when 2020 Amazon sells off from this level again, what does it give you? Opportunity to buy as low as possible. Correct? This is the power of the system. Obey the rules, and the skies are the limit. It's a reversal zone in front of you on S&P. It's a junky pullback, not a place to enter into. It's identical thing on Amazon. With rules, you know what separates crush versus chop, and that's very important moment in your long-term investments and in your day trading positions. The second key step of the system to trade with rules. There is no speculation here. Precise entry, stop and target on all instruments at key institutional entry and reversal points. So what would your trading be if you're trading with rules, if you stop speculating? Maybe your podcast, your video, your email, your journey will be next. Because if these traders can do it, so can you. Simply identify what instrument appropriate for you. As again, every trader different account. Every trader different instrument. You see on the top Andy shares about his son, Dominic. Andy is hedge fund manager in London. This is the email Andy sent prior to introducing his 14-year-old son, Dominic. Here's the email from Andy. Swing trading tripled UK live account since July 1st. And then Andy introduces his son Dominic to the course. So when Dominic sending me this email and says, this is what I have done with institutional trades of entry, guess what Dominic will do next? Of course, Dominic wants to be hedge fund trader. Do you know what I'm doing after this webinar? I'm mentoring 11-year-old Emma, daughter of long-term trader Michael. I'm mentoring 11-year-old Emma how to beat Dominic. It's a family affair. It's a family community. Husbands bringing wives, fathers bringing their children. Everyone bringing their family members, friends, their community to Fibonacci Trading Institute. With institutional power, you're spending little time trading. You're focusing on ultimate quality, no matter what instrument you will choose to trade. Is it stocks? Is it options? Is it forex? Is it cryptocurrency? Is it futures? It is absolutely your choice. If 14-year-old Dominic can do this 3 profitable weeks in a row, so can you. And that's the podcast you can listen to. This is what Dominic trades. This is what hedge fund manager trades. This is what every trader trades. Pure price for entry and alpha, Fibonacci for exits. My goodness, look what's happening on S&P. This is what Dominic trades. Did you see the word reversal zone? Of course, Dominic understands to never, ever, ever enter into this level. Exact same thing on Amazon, exact same thing on Apple, exact same thing on any stock you choose to trade. The only option to short from reversal zone when rules all bait. And that's the system anyone can trade. We already reviewed Apple, correct? We already reviewed multiple instruments. As you can see, it is every trader's personal choice. And when the trader comes to the room, and this is one of my favorite posts, this is absolutely the most important moment. Give me a second, please. Let me share this. Trying to find that post. I have so many emails, so many posts. Hold on, please. This. So Brett can do this going from $10 an hour to $3,500 a day. You can watch a video he shares about his life. You decide what you want to trade. So here's a very important moment on oil. This is oil 2016, and we'll review oil right now. So what are you seeing on this chart on oil? This is your long-term positions. As I work with student in Saudi Arabia who is trading only oil-based stocks. This is ultimate bottom on oil 2016, correct? When rules of the Alpha Fibonacci system met, intelligent trader takes long position. So when oil picks up this theme, intelligent trader understands it's that bright pink line, correct? Is everyone seeing this? When this bright pink line is out, oil skyrockets and more than doubles in value. 2 years later, what do you see ahead? Institutional reversal zone. You are preparing to place option trade. Are you preparing to take position on shorts? Correct? You are not buying near this level. So when oil is selling off, do you remember what we're monitoring on S&P right now? 55 is crucial on oil. 2018. This support level is out. Oil in free fall. And what do you know? What do you see at the bottom? Remember oil contracts change? Oh my goodness, oil heading to 10? And when 2020 contracts are updated, what do you know? Many months ahead. 15 is next. And what do you see after 15? With a current oil contract, it's negative number. It's ultimate bottom with ultimate precision many, many months ahead. As a day trader, you're buying institutional bottom. As an investor, you're buying institutional bottom. And when bullish rally picks up this theme, you understand how important and crucial bright pink line to the upside, correct? Where oil have been stuck for many months and many months. And that's long-term positions with Alpha Fibonacci system. You may choose to trade. This is what student trades in Saudi Arabia. And this is what hedge fund manager trades in United States. Choice is yours. Is it long-term position or is it long-term investment decision or is it day trading? Choice is yours. So many of my students sign up for the lifetime of all strategies I will ever develop. I love what I do. This is the power of this system. On any instrument you will choose. The third key step is crucial, critical. You must identify your trading range prior to trading based on the institutional zones. Every single day this range will vary. Every single day market conditions will change. Why in the world are market conditions so difficult right now? Because institutional rally reached the top. For the last 3 weeks, S&P had been frozen at ultimate top. So if institutions will continue holding positions, market will change you to the core. There is nothing in common between buying here in March, in June, in April, in May versus here. And this very challenging market conditions can last a long time. So understand the difference, please. This is crucial, critical part of your successful trading. And that's what traders trade globally, even at the most difficult trading ranges. And that's more and more emails from my traders, as you saw Jennifer's photo, as you can listen to Carlton's podcast on our home page. So since I'm running out of time, I would like to remind you that if you decide to trade with software, with trade recognition software, if you will decide to obey the rules, you can trade the Forex, of course. You can trade commodities. You can trade stocks. And if you utilize synchronicity of the scanner, trading becomes joy. As traders share in many, many countries all over the world for the last 10 years. With a scanner, you don't need to flip charts. You simply wait for your trade and obey the rules of the system. So this is very important and very crucial step. I live and breathe what I do. And in the month of February, I have the most important event, absolutely impromptu, playing out. In the month of February, I'm focusing on my students only for at least a couple of weeks. In one day, you will learn more than ever. And all of this, no additional cost to the new members. So if you come to the website, please understand. If you choose from any of these packages, the savings are actually much more than $3,000 in the month of February. I don't work with non-students at all until further notice. I am with my students only. So if you will decide to trade with a lifetime system for any platform, the front package, first package is for you. It is only $29.77. You have hundreds of videos. You have live classes, you have modules, you have lifetime system traded globally that you can use on any platform, any instrument. This is the most popular package. Lifetime software for Ninja 8, trade recognition software, multi-market scanners, live classes, modules, recordings, video library included. Private mentoring, I'm at the point of being overbooked. I only have one spot. If this is something you consider, you need to speak with me first. So, I highly encourage you, if you thinking about trading seriously with consistency as traders do globally since 2011 on any and every instrument possible, you can be one of these traders. I look forward to working with you. So please read students' emails, listen to students' podcasts, and choose from the option appropriate for you. Because if these traders can do it, so can you. Any questions for me? Do not hesitate to contact me. Call or email me 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. Be well, everyone.